companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Away from the opening bell in New York. Good morning to you all. Equity futures are positive, just about on the S&P by 1/10 of 1%. On the Nasdaq 100, up 1/10 of 1%. Also down on the week, though. The likes of Michael Harnett over at Bank of America, the bear is still bearish, talks about the inflation shock becoming a rate shock, and the recession shock for him is still to come. We'll talk about the banks and how defensive this equity market has become beneath the surface over the last week or so, a little bit later in the program. Let's talk about in the bond market as well. 2s, 10s, and 30s on a 2-year right now, 250.95, but really the story of the week, not inversion, steepness coming back in. The 10-year yield breaking back out by 30 basis points or so to 266.78. That is not enough to support the financials. Again, that's the theme of this program going into earnings season next week for the big banks. JP Morgan kicking things off on April 13th. Want to finish here, though, just on European assets, the euro, the German 10-year, the French 10-year as well. Over the last week or so, yields starting to kick a little bit higher. And you're starting to see the French yield, that spread between the German 10-year and French 10-year, Tom, just start to widen out a little bit going into this election. This weekend in France.
And currencies show it as well. If you take it over to the broader perspective with a 108 handle on euro and DXY coming just within a touch of 100 as well, it is a currency market looking to Sunday. No question about that.
Not the base case still, though, Tom, for a Le Pen win. Let's be clear about that.
No, the base case is a Macron win.
Jordan Rochester of Nomura said, sure, if she wins, you might get euro-dollar back down towards parity, 103 perhaps. Goldman said, yes, of course, some weakness. But Goldman's point, their base case is still a rally back to 120, and escaping negative interest rates in Europe, Tom, is a big, big deal. And it looks like perhaps we're on the road towards doing that.
Yeah, Guy Johnson, in my experience at the last French election, John, was you rallied down the River Seine towards a decent dinner. And
are you trying to sell this trip still?
You know, well, you know, Guy Johnson and I on the River Seine, and you went down and you rallied back.
Do you remember the coverage of this? Can I just explain for everyone what actually happened that weekend? Tom went to France and sat there with Guy. I was put in a studio in New York and went through markets. What happened to my trip?
I don't know. You know, your people didn't talk to my people. But what's really distressing, John, they don't start dinner in France till 7 p.m. I'm on the surveillance schedule. I'm walking around at 5:30 trying to get dinner. It doesn't exist.
Euro-dollar right now, Tom.
It's stressful.
108.77.
Peter Hooper's going, what are they talking about? That's because Peter Hooper, with his experience at the IMF and his leadership of global economic research at Deutsche Bank, is widely known. Peter, I've got to go to young Matt Lucetti, that whippersnapper who's got the recession word. I want you to dovetail in your Fed misery index into the audacity to call recession out the end of 2023. How can you look through the Hooper crystal ball out that far?
Tom, this doesn't happen very often. Certainly the economy is looking pretty good for the near term, the rest of this year. But the number of times historically when we've seen a Fed facing this kind of pain for the Fed, I will say, and then this misery index, the standard misery index is unemployment plus inflation. If everything's ideal, you're up around 6% there, 2% inflation, 6%, 4% unemployment. This Fed misery index is something, a name that I'd like to give to this brilliant index that Matt and his team have come up with. It's the sum of the amount by which the Fed sees inflation over its target, which is now something like 3.5, 4 percentage points.
Right.
And the unemployment rate below current estimates of Nehru. Now, the natural rate of unemployment has been rising for a number of reasons, and Fed staff estimates, our own estimates, say something now close to 5.5%. That's another 1.5 percentage points on unemployment. Add the 1.5 percentage points of undershoot on unemployment to the 4 percentage points overshoot on inflation. You have you're up around 6%.
Peter, this shows, along with, say, a traditional Taylor rule, which is distorted as anybody, including John Taylor, would ever imagine it could be, that the textbooks don't work here. If the textbooks don't work here based on the Deutsche Bank U.S. Misery Index or a classic Taylor rule, what theory works here right now?
I think the theory that's working right now is we see inflation that's just way too high, and that's being increasingly driven by labor markets that's just way too hot, okay? Inflation's broadened out, labor market is very hot, wage inflation is going much higher than is consistent with the Fed's objective on price inflation, and it's being increasingly demand-driven. That says demand needs to be slowed. It's simple supply and demand here, right? The Fed needs to step in and needs to take some of the steam out of the labor market. It needs to actually raise unemployment a bit in order to take this pressure off. It's not too difficult here, and it's surprising that the broad consensus in the economics forecasting profession has not yet caught up with this. I think they will soon.
Peter, you've got a monster call, not for the Fed, for the ECB. I mean, this call on rates, I put this out on Twitter earlier this week, and the amount of pushback I got, I imagine you're getting pushback from clients too. Can you talk to us about it? 250 basis points of hikes from the ECB between this September and next December. Peter, how is that achievable for the ECB? When we talk about the Fed, I understand how that's achievable, but for the European Central Bank, 250 basis points of tightening. Can you walk us through the process you've gone through to get to that number?
Well, all credit due here to Mark Wall, our chief European economist, and his team. I mean, they've been out front on this for quite a while. So U.S. inflation is pushing 8%. Euro area inflation is pushing 8%. Now, okay, the composition's a little different. It's been driven more by commodity prices, by oil, by gas prices, and it'll be reversed to some extent more quickly. But there is increasing evidence that this is broadening out, that you're beginning to see some in the labor market as well, no question. Some of the same inflation psychology that we're worried about in the U.S. is starting to take hold in Europe. And look, the ECB is, if anything, more concerned about the inflation outcome than the U.S. That's very central to their objective. So we think, Mark's been talking about the possibility of 50. It's not quite his call yet, but 50 and he's got liftoff in September. I saw your survey this morning that had the consensus still expecting December. We think liftoff in September and very possibly more aggressively than the 25 that's widely expected in the first move.
What's the distinction between a slowdown and a recession? Is it central bank policy? Is it the pace of inflation? Is it something else?
Okay, so we have a recession in the U.S. We have what we're calling a growth recession in Europe. Europe is facing a somewhat different picture. In the U.S., huge fiscal stimulus is now being reversed. Europe, we're seeing a little more of a delay in the fiscal picture coming along. We're getting a little more help on the fiscal side in Europe. And with prices likely to come down a little faster, the hit to real income's not quite as great. So we think that we see a slowdown getting very close to what could be technically called as a recession, a growth close to zero at the beginning of 2024 in Euro area, but just skirting by and avoiding an actual recession. So a recession would be 2 quarters of negative growth, at least 0.5% increase in unemployment. We're thinking a few tenths increase in unemployment and maybe 1 quarter of near zero growth.
Peter, fantastic research. It got me thinking, and that's some of the best research. That's what it does. Peter Hooper there of Deutsche Bank. Earlier this week, if you missed the note out from the whole of the team over at Deutsche Bank, a fascinating read. Just some of the highlights for you. We're now projecting a recession in the US, a growth recession in the Eurozone within the next 2 years. On rates, this is what they said about the Federal Reserve and the ECB, respectively. We now expect the Fed funds rate to peak above 3.5% next summer. We see the ECB raising rates 250 basis points, TK, between this September and next December.
Right. I go 2 points here, John. First of all, that terminal rate above 3% is something all of you, whether you're pro or amateur, you're going to start focus on when John mentions terminal rates. And others, I believe Bank of America, John, have a much lower terminal rate, a more benign terminal rate for Europe. But the other is the leadership of David Folkers-Landau with the great Peter Hooper here over looking at how currencies signal here, the world of George Saravelis. And the answer is, if you get that yield structure, John, you get strong dollar, weak euro, and Folkers-Landau is heated. Europe can't sustain that.
What kind of economy do you get, Tom? I mean, in a world of minimal conviction right now, I think there would be conviction on this point. If the ECB hiked rates 250 basis points, could they escape a recession? That would be a big move for the European bond market to tolerate, with Italy in mind.
Look at nominal GDP. Look at the productivity and the technology. I mean, Macron is pushing the technology of Europe. I mean, the technology differential, John, between the two sides of the Atlantic is stunning. And I go to the malaise that's out there, again, away from the tourist areas. I mean, I think we have such a wrong view of the angst of this election in France. Like in Hungary, it's huge.
You want to reframe it on the ground, Tom? Is that what you're suggesting?
Well, I talked to Mr. Trichet, and Mr. Trichet is like, Tom, you don't have to go to Paris, go to my Lyon. And so we could bring the team to Lyon for the second stage of the elections.
Jean-Claude knows something about hiking too much at the wrong time.
Yeah, exactly. I mean, he lived it.
He did leave it. Interestingly enough, that was the last time the ECB hiked interest rates.
Yeah.
Lisa, it was back in 2011. It has been that long.
The momentum, though, in the European economy just isn't strong enough, though, to sustain the same pace of rate hikes as in the U.S., which is the reason, perhaps, that some people think that the slowdown is going to be more material in the U.S. I'm trying to wrap my head around this.
Some real doubts about that ECB rate path.
Yeah.
The pushback was pretty aggressive.
It was pretty aggressive.
We don't have a view on this show.
Never.
Euro dollar 108.82 unchanged. Coming up on the politics, Tina Fordham, the founder and geopolitical strategist at Fordham Global Foresight from New York. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Congress has now put Russia in the same category as pariah nations such as North Korea and Cuba. Lawmakers overwhelmingly voted to strip Russia's normal trade status and ban imports of its gas, oil, and coal. That adds to the economic squeeze by the U.S. and its allies to punish Moscow for the invasion of Ukraine. Global food prices are rising at the fastest pace ever. The war in Ukraine has choked off crop supplies, leading to panic about shortages of key staples. According to the United Nations, food prices rose 13% last month. And Ketanji Brown Jackson will make history this summer when she becomes the first black woman to take her place on the U.S. Supreme Court. The Senate confirmed her nomination by a vote of 53-47. All 50 Democrats voted in favor. So did 3 Republicans, Susan Collins, Lisa Murkowski, and Mitt Romney. And in Costa Rica, a DHL cargo jet broke in 2 when it skidded off the runway after an emergency landing. The 2 pilots escaped without serious injuries. They had reported hydraulic problems with the Boeing 757 moments after takeoff and returned to the airport. And Spirit Airlines has agreed to have talks with JetBlue over its $3.6 billion takeover bid. Spirit says the JetBlue offer could lead to a superior proposal. JetBlue's bid topped a $2.9 billion offer from rival discount airline Frontier, which Spirit accepted 2 months ago. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
The Indian city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Market that over the past few weeks has made it clear it wants to go high.
Hello traders, how are you doing today? I'm going to place order to sell short Bitcoin. The price I'm looking to sell, I'll tell you, 43,607. Okay, if you're looking to trade Bitcoin, please place your order at 43,607 pounds. Okay, stay with me, follow my trade, and we will close this trade in profit together. Okay, I'll speak to you later, guys.
do what it takes to maintain the effects of the sanction on ground, and of course looking if cryptocurrencies is being used as a way to escape.
Marguerite Vestager there, the European Commission Executive Vice President from New York City this morning. Good morning. Going into the weekend with futures just about positive on the S&P by 0.2%. On the NASDAQ, up a little more than 0.1%. Yields are higher too, up a basis point to 267. Let's round that up for you. What a move we've seen this week. Week to date, yields up by around about 30 basis points on a 10-year. Euro-dollar, just a little bit more positive on that currency pair by almost 0.1%, Tom. Just short of 109, 10, and a lot of eights.
I'm glad you mentioned it, John. I think we've underplayed the shift that we've seen this week in yield as witnessed by yield inversion back out to something less inverted. And I'm sorry, the 10-year real yield has been underplayed by all this week, and it's really come back.
With the exception of one person, Bramo. Lisa's been on that tick for tick through the whole week, Lisa, as we get closer and closer back to zero.
You know, we're in different rooms. You have to understand. Sometimes it's hard to hear through the wall. But, you know, honestly, it's been driven by real yields, which I find so fascinating. That basically, yes, we're still negative here, but the idea that inflation-adjusted yields are the highest they've been going back to early 2020 really puts into perspective.
Yeah, all the more reason to tune in with John Farrell this afternoon. The Real Yield. Tom. It will be a uniquely inspired program. Always inspired. Tina Fordham with us. She's, of course, Fordham Global Foresight. We're thrilled that she could join us after an exceptionally strong week of debate over what the West should do. Tina Fordham, I can say in all my years of doing this, to have John Bolton say, would Washington get over it? They're not going to start World War III. And then Elena Farkas saying the same thing, working with President Obama. They're not going to start World War III. Absolutely extraordinary to see the common feature of your people saying, Washington, calm down, get focused. Do you agree with Bolton and Farkas? We're not going to start World War III if we're more assertive.
I am not sure that we're in control of the trajectory of events. And I think that that is something that has been much underestimated, regardless of the, stripe of the administration in power. No one expected Putin to undertake these actions in contrast to Russian interests. I think that Putin wants to drag the West into the conflict in Ukraine, because that would reinforce his narrative that NATO is not a defensive alliance, it's an offensive alliance. And I think we're going to see more atrocities. I think this is a dirty war that Russia is conducting, and it's really going to test Western resolve in that respect about not getting involved in the fight.
There's an immediacy here. What should be the resolve this weekend?
Well, I mean, if we think about how sanctions historically have worked, there's a bit of frog boiling involved. We've also seen some, significant moves that are barely making the news in this environment, like Finland saying it's ready now to apply to join NATO. That's a big deal. The idea of Finlandization is really important. Finland has been at war with Russia. It knows how significant such a move is. So Putin's getting a lot of backlash to the steps that have been taken in Ukraine, not showing any sign of deterring the moves.
One notable development, Tina, has been an apparent strengthening of NATO through all of this, a real unity, at least in perception, if not in reality. How much of a blow will that unity take if Marine Le Pen wins the presidency over in France?
I mean, I guess I haven't really taken seriously that Marine Le Pen will win. This is the 5th French election that I will have covered in my time as a political risk analyst. On the street. She has had a boost. The cost of living campaign that she's been on, is showing some effects. But I don't think anybody is ready yet to start talking about a French President Le Pen.
How much is the unity threatened by the fact that Germany is so dependent still on Russia for gas, and it seems very unwilling to move away from that in the near term?
Well, this is something that I've been talking about quite often, and I see people like Paul Krugman at the New York Times are also talking about I've called it enabling Putin, and it's made me think a lot. You know, political risk, what I do for a living, is supposed to be about advising investors and companies about things that they might do that would bring risks to their bottom line, to profits, and to everything else. Well, I'm thinking now that we need to redefine political risk, to think more about what it is that we do as consumers in this energy sense that is actually enabling other countries to inflict harm. And I know I'm not alone in that thinking. I think the other idea I'm thinking about is the idea of the resource curse. Here we have a country that has managed to finance its military operations through possessing oil and gas, using that in effect against us. It isn't like Germany wasn't warned. Germany is 40% dependent upon Russian gas imports. And you've had a kind of steady stream of German politicians in recent days saying, we got this wrong. That notion that commercial interdependence would lead to peace has been completely blown open. And the urgency to reverse the dependence is only going to pick up.
Tina Fordham, thank you. Fordham Global Foresight. It's one of those strange things in politics, Tom, where one country comes out and says, we got this wrong, but pretty much everyone was saying, you're getting it wrong at the time. I mean, this is not even 2020 hindsight. This is in the moment, at the time.
I agree
people,
with the
countries.
Yes.
President Trump went over there. I understand that name for many people is still deeply, deeply unpopular. But he went over there and said exactly the same thing, Tom. Exactly the same thing. And of course, nobody at the time liked the messenger, did they?
Well, Mr. Trump may have been a messenger, but I would suggest there were, as you say, John, there were many, many, many messengers. And the one thing I do is there's a pile on in Angela Merkel right now, and I would really take it back further to just the justification or rationalization of doing business with Russia for a Germany that was flat on its back in terms of energy. You got to get the energy from somewhere. And at the time, in hindsight, it was an easy but incorrect decision. No one predicted what you would see from Mr. Putin. I mean, this is a singular wild card.
It's on the late 2000s, Georgia, 2014, Crimea. Can we really say that no one could have predicted what President Putin would have done?
I think a huge body of people did not migrate a Georgia, Chechnya over to the Eastern Front, if you would.
Can I just say, this really raises some issues. If Tina Fordham is right, that we're rethinking our relationships and our security, then what does that mean for China? And this is why it's so notable that Nancy Pelosi is thinking of going to Taiwan right now. Given that new calculus, what does that mean for the stance from the West and the East?
Do you actually think they've got the appetite right now to do anything about that?
Well, they're talking about it. I mean, they're talking about potential sanctions. They're talking about all sorts of things. No, I would guess that no, but it's notable that they're still talking about it.
From New York City this morning, good morning. This is Bloomberg.
the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi Nggak kayak dulu. Kalau dulu ramai sekali. Sekarang paling dapat jualan ya 100, 120 gitu. 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
A lot of what the Fed has to do initially is just catch up.
The market is pricing hikes, and it's clear that's the direction of travel.
The path of the Fed is almost priced to perfection by the rates market.
If the Fed overreacts to the current prints, they may actually be in a tougher spot in the fall.
The Fed is going to have a very hard time slowing down the machine.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Futures just about positive on the S&P, setting you up going into the weekend for an important week ahead with CPI and earnings starting in America, Tom.
It's going to be interesting to see earnings, and we'll get to that next week. ECB just as important. But, John, I want to make clear on a Friday where we're slipping into the weekend, the market speaks volumes. I'm looking at dollar, strong, persistent, euro with all the angst about the French election, a 108 level. But, John, the sleeper this morning is dollar yen at the 124. If we see a 125 weaker yen print, that is a signal of resilient dollar.
That is the cross-asset story, Tom. For me, beneath the surface of the equity market, get below the index level, go to the sector composition and look at the sector performance. There are some alarm bells ringing. Not very loudly, but they're starting to ring. And it's the banks. The banks, for me, underperforming, Tom, and not responding to higher interest rates, higher yields in the Treasury market. That is more than notable.
Friday, it's Gloom Friday, of course. Of course, also opening day, Red Sox, Yankees in gloomy, rainy weather, so it works. But, John, the Gloom crew can point to a lot of micro data that's actually quite weak. Of this week, John, of surveillance, I was thunderstruck at the set of optimistic notes we got yesterday.
We get lucky, Tom. We can talk to the Gloom crew right now. Bramo, looking ahead to next week.
Well, really, I think that Ibrahim Rahbari of Citi put it really well. What's the distinction between a slowdown and a recession? Next week, we do get that CPI print. 8.4% is the consensus, and then into earnings. And here's the issue for me. If you get really good earnings and really good projections into the future, does that just mean that we are not at peak hawkishness for the Fed, that they have to move even faster, or at least signal greater hikes and a faster reduction of the balance sheet in order to inject some control over inflation?
This tees up that Bank of America note and the client feedback that they offered for everybody. And one of the quotes in there, Bill Dudley, in everyone's mind right now. It's in yours too, isn't it?
I just keep wondering, at what point does the Fed take a look at the market response and say, this isn't good enough? you're not actually tightening for us. We need to do it a little bit more harshly.
Futures are positive this morning, and good morning to you. Let's whip through it. We're up a third of 1%, a little more than a quarter on the S&P. On the Nasdaq 100, up by 0.28%. Down on the week, down hard on the week actually for the Nasdaq 100. Yields up a bit today, up a whole lot this week. 267.35 on a 10-year, and crude backing away, backing away. Look at this, Lisa, a 95 handle now on WTI, 95.90 and down about a tenth of 1%.
It's been a round trip. We're back basically where we were before the war in Ukraine started. The answer really as to why is not necessarily positive. Yes, you got that Strategic Petroleum Reserve release, but also you do have the potential slowdown with the lockdowns in China and this feeling that we're going to get tighter monetary policy. When it comes to the war in Ukraine, there still is not a resolution. Perhaps we're in a bit of a pause as the sides reset. Today, German Chancellor Olaf Scholz is making his first visit to London, visiting UK Prime Minister Boris Johnson. We're looking for some sort of beautiful pictures of them at 8:30 a.m. How much do they really talk about the gas issue? UK is more willing to ban imports of gas from Russia, not so much at Germany. We've been talking about that throughout the morning. At 12 p.m., this to me is fascinating. The USDA is going to release their World Agricultural Supply and Demand Report on corn, soybean, wheat, and cotton for the month of April. How much can supply from the United States, from other commodity-producing nations, offset the increase that we've seen, the decrease that we've seen, frankly, in the exports from Ukraine? The increase that we're seeing is in food prices, which climbed by 13% in the month of April. This according to UN. This leads to the highest rate of inflation for food going back to ever. How we saw a 50% climb in food prices since the peak of the pandemic in 2020. And then this weekend, this really bleeds into the French presidential election. These higher food prices, these higher commodity prices, higher commercial prices really have driven the support of Marine Le Pen facing off with Emmanuel Macron. This has definitely led to some feeling of trepidation about the euro, which is about the weakest versus the dollar going back to 2020. Is this realistic that she could win?
John, I mean, I think this is really important, and this really falls into the second round of the election, particularly if Le Pen does well. And this is just in, John. We have a photograph of l'ensemble de surveillance in Paris. And I just think, Alain did such a good job on this. Does this look good, John, as our set for that second Paris election? On radio, it's, Champs-Élysées and the whole thing.
It looks fantastic on radio. Are you still trying to sell this trip to Paris this weekend?
Great. I just think that it looks great. Of course, we thank Alain for setting this up with the French government, the top of the Arc de Triomphe.
You forget how well I know your family. You've promised Mrs. Keane a trip to Paris, haven't you?
He's trying to expense it.
And he's looked at the flights, transatlantic, business class right now, and TK.
I'm trying to dovetail it with surveillance. You got that right, John.
It's getting pricey. Greg Staples joins us now, the head of fixed income for North America at DWS Group. Greg, let's start here, just on QT, which is a big focus of things at the moment. You've got a thought which I think is kind of out of consensus. You said this, QT impactful but not as market moving. Why is that, Greg?
Well, I'll tell you what, Jonathan, I think the narrative in the fixed income markets for the first quarter was basically pricing in Fed hikings. They've done a good job of that, 11 over the next 12 months or so. But I think the narrative in the second quarter is going to be QT and how that impacts the longer end of the market. The Fed, with all due respect, Lisa, has really much put out there their peak hawkishness in terms of policy. 11 hikes is a lot. And they've laid out their quantitative tightening program pretty much clear. Now it's on autopilot for the next year. It's really now for the market to catch up to the Fed, and we think that the short end has done as much as it can. The long end still probably has a little bit more room to run, probably get the 10-year to 2 3/4, maybe even flirt with 3%. It's a good thing, I think, though, because if the market does a little bit of the Fed's lifting for it, if people look at potentially a terminal rate at 3.5% priced in, look at a 3% 10-year, you're going to see a bit of a pullback from chief financial officers, from investors, from basically house builders, and you're going to see a little bit of a slowdown in the economy, and that's going to give the Fed a little bit of room to perhaps not have to go to that 3.5%, perhaps 2, 2.25, 2.5 is the real terminal rate once we get into 2023.
Greg, you committed economics at Columbia in the time of Volcker. You were there, fabulous faculty at the time, and the ferment that we saw in the late 70s and the early 1980s, and you resurrect a phrase. This is the first time, folks, I've spoken about this with Greg Staples, and I'm going to say 8 years, soft patch. Define for us how a soft patch is doable versus the gloom of recession.
Well, of course, when we talk about recession, Tom, you're talking about 2 consecutive quarters of negative growth. And I know some forecasters are actually starting to talk about that in 2023. But we think you're going to see a soft patch. We wouldn't be surprised at all to see a quarter or two of 1-handle growth or even 0-handle growth or perhaps even 1 quarter of slightly negative growth. But that's not really recession. That's a soft patch. We think there's enough momentum within the economy. We don't think that there are any over-leveraged balance sheet items that are going to lead to a sharp slowdown in the capital markets. And so slowdown, listen, the data is obviously always erratic in the U.S. economy. It picks up, it slows down, but a real true recession we just don't see right now.
Greg, do you really think that Fed policy is on autopilot at this point?
I think that the short end has got a little bit of flexibility. They're clearly looking at real-time data. If you see a couple of quarters, for example, of lower PSIs, or if you see some the jobless claims numbers soften a little bit, I think that they've got the flexibility to go on to pause, maybe just go to 25 basis points or even take a quarter off. But in terms of their quantitative tightening program, in terms of running off the balance sheet, I think that they're pretty much on autopilot. The only thing that they've got to do now, potentially, is that if they're at the $35 billion in mortgages and $60 billion in Treasury runoff, some of the months you don't even have that much, and they might actually look to the mortgage market to sell a little bit more in order to get that target. But that's all the flexibility they've got.
You said that markets have to catch up. Where it needs to be the catching up the quickest?
I think it needs to catch up the quickest on the long end. I think the short end has pretty much done as much work as it can. 11 tightenings is a lot of tightenings. If we really truly get to 3% by the middle of 2023, I think the economy really feels that. Then the long end, I think you really got the impact, for example, on the housing market, on capital expenditures. That's the area where you need to get to 2 3/4, 3%. And with all due respect to Mr. Dudley, I agree with him. I'm not sure I agree with the causality. You need to see a little bit of weakness in the equity markets. You need to see a little bit of weakness in the credit risk markets. We're not quite there yet.
Greg Staples of DWS Group. Greg, thank you, as always. I think you can get on board with that, Bramo, the idea that we've seen peak hawkishness if you believe that QT isn't going to be as market moving as, say, Greg Staples expects. But that's still up for debate. A lot of people might take the other side of that.
We don't understand quantitative tightening, and I say we as me, but I think a lot of people would agree with that sentiment. We don't understand the ramifications, which is the reason why so many on the Fed wanted to focus on the front end. It just didn't work quickly enough, so they have to take a more aggressive stance.
So real yield today, the final round, in the rapid fire round, I will ask QT, does it equal higher yields or lower yields?
Yay.
And let's see if there's a unanimous voice there whatsoever. Does everyone sit there and go higher, higher, higher? Do they all go lower, lower, lower? I imagine between the three there'll be a split.
I would guess that that's the same. And honestly, yesterday I got so excited at 4:30 p.m. I went to my Bloomberg terminal and I looked up the Fed's balance sheet.
What did it do?
It was basically flat.
It was flat.
Quantitative
unchanged.
What
were you excited for? That it might go down?
Yeah, I thought it you might start to see a sharp decline, and it's quantitative stasis.
Hey, you might see that in the months to come.
Maybe.
That's for sure. Tune in for Bloomberg Real Yield a little bit later today at 1 p.m. Eastern Time. And then after you've done that, you can watch the golf. Tiger Woods teeing off at 1:41 Eastern Time. Isn't that a perfect afternoon, Tom Keene? That's just wonderful.
Yeah, it's a good afternoon. And what's great about it, John, is, the way I would look at this is I'm trying to expand out my Tang choice while I watch the Masters. And there's not just orange Tang. I was noticing, John.
I didn't know they had different flavored Tangs.
They have different flavored Tangs. It's huge in Brazil, for example. I may pony up today a Singuela or an Esciriola or a Graviola Tang.
Are you trying to come to Brazil?
I just think, a Graviola Tang would be like, something to watch the Masters with.
Is this on the way to Paris?
Yeah.
You're going down to Brazil, Tom, on the way to Paris?
I have no idea, frankly, how Tang is huge overseas.
Is it really? Is it really? We'll have to send someone to do some market research.
We should do market research in Brazil.
We should do that.
Do we have a volunteer?
Futures up 1/3% on the S&P. Yields up 3 basis points on a 10-year, 268.49 from New York. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Rishika Gupta. For the first time, the European Union has targeted Russia's crucial energy revenues. The bloc agreed to ban Russian coal imports, and Japan may follow. It's the 5th round of EU sanctions since Russia invaded Ukraine. The move also includes a ban on most Russian trucks and ships from entering the EU. And the war in Ukraine is entering a new phase. 6 weeks after Russian President Vladimir Putin launched the invasion, Ukraine may have just weeks to acquire new weapons for fighting in the eastern part of the country. Russian forces are expected to regroup after being pushed out of the area around Kyiv. Meanwhile, dozens of refugees were killed today after Russians allegedly fired a missile at a train station in the Donetsk region. And Russia's central bank unexpectedly cut its key interest rate, the most in 2 decades. The rate was slashed from 20% to 17%. That's seen as a sign of confidence the central bank can reverse some of the monetary tightening it imposed after the invasion of Ukraine. And Treasury Secretary Janet Yellen is counting on the support of corporate America for a global tax deal to help win passage in Congress. But big business is nowhere near backing the plan. Bloomberg spoke to executives at 8 U.S.-based multinational corporations. They say there's too much they don't know about the deal, whose fine print is still being negotiated. And in golf, he's 4 shots behind the leader after the first round. Still, it was Tiger Woods' day at the Masters. Woods shot a 1 under par 71 in his first round of competitive golf in 17 months. The 5-time Masters champion has been recovering from a car crash that nearly cost him his right leg. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
The war in Ukraine rages on.
President Putin's invasion is brutal.
Turn to Bloomberg for up-to-the-minute reporting from around the world and analysis of what it all means to you.
The intention here is to increase the pressure on the sanctions front.
I think the United States policy is that the sanctions continue until President Putin is no longer there.
For continuing coverage from Ukraine and around the world, keep it tuned to Bloomberg Television and Radio.
This Taylor rule calculation is telling us that where we should be in under minimal assumptions, very generous assumptions, it's saying it should be at 3.5%. Where we actually only 1/3 of 1% or 37.5 basis points. So you're too low by about 300 basis points.
He's become very hawkish, even more so over the last month. That is James Bullard, the St. Louis Fed president. From New York City this morning, good morning. Futures are positive on the S&P, up 1/3 of 1%. On the NASDAQ 100, up 1/3 of 1% also. On a 10-year, big week, higher for 10-year Treasury yields by almost 30 basis points. 268.11 on a 10-year today. On a session, up 2 basis points. On the year, I think we need to sit on this. Your 2-year closed out 2021 at 73 basis points. It's now at 252.38. If I told you at the end of last year what would happen with rates through the first quarter into April, and then asked you where the banks would be, would you tell me that JP Morgan would be down 17% year to date? And over the last 7 days, Tom, the KBW Banks Index lower through all of them. Something's going on with the banks. I find it absolutely fascinating, TK, all ahead of earnings season next week.
I'm going to go into economic growth, and that it's an idea of how do they dovetail with economic growth, and we'll learn a lot next week, and particularly of the view forward. John, one tip I would have is I think you're going to see expense control reaffirm. We are always strong on bank earnings. It's something Bloomberg surveillance has believed in from day one, and that means speaking to experts. We have the advantage of Allison Williams at Bloomberg Intelligence and others on the street. Kenneth Leon has done yeoman's duty for us, and he will join us next week. And we're thrilled that Ken Leon joins us now with CFRA to start Global Wall Street in their weekend contemplation of the future of our banks. Ken, let's go to Jamie Dimon's letter. He has trepidation about Apple and others in financial bank technology. What are we going to learn about bank technology investment this week when we look out 5 years of the big banks?
Well, it's great to be here. And actually, of the growth of expenses for JP Morgan, 40 to 50% is investing in technology. And technology is needed really to protect the franchise as it relates to new entrants, whether it's Apple, any form of payments outside the system. And in the mortgage area, banks are a small percentage. They used to be 80%. It's below 30% of the market for mortgage origination. So what we're seeing is technology is leveling the playing field. And for banks that have strong brand, scale, and trust, they have to invest, and that affects margins. And we'll be hearing about that in a very uncertain world.
I've got $60 billion of operating income for JP Morgan, plus or minus a couple billion. Who's counting? Ken Leon. Why do they have to build it internally? Why don't they go out and buy a firm, buy Klarna, buy this airline, a firm, Uplift or whatever? Why don't they just go out and buy the Young Turks?
They're doing that mostly on the early stage, venture capital stage, but not in terms of significant headline multi-billion-dollar transactions. And the other factor here is why Apple or an Amazon maybe won't cross the Rubicon on bank regulation is they don't want to be banks. There's, enormous capital that is put to the side for regulation, whether it's Basel III or other requirements, or even paying the FDIC to run its agency. those run in the billions and billions of dollars. And that's kind of like the hidden cost that an Apple doesn't want, but the banks bear.
Ken, I just want to pick up on this rates move. This bond market is seeing some massive moves, and this equity market, the banks aren't responding to it anymore. It's not just Europe, it's the United States as well. And Ken, I want to understand your interpretation of what's going on here. What's the forward look that this equity market's picking up on, given that it's no longer trading on high yields?
I think what it's saying is that no matter whether we have a strong or weak economy next year, or whether we have controlled or stagflation, the Fed has to move ahead to control inflation. And we've already seen it in the bond market, the magnitude of the rates. Unfortunately, we're not in the perfect world. The bull case prior to the Russia-Ukraine war has been that in a stable to growing economy, rising rates was a benefit for banks. One of the concerns here is really the consumer, and the other concern is whether corporates will hold back on capital investment because of the uncertainty and also the rising costs coming from inflation. Those are significant clouds that we did not have back in even early February.
Ken, as mortgage rates rise toward 5%, as you see borrowing costs more broadly increase dramatically, how much are you expecting lending, particularly on the consumer side, to decline?
Yeah, we already just looked at the Mortgage Bankers Association forecast, which tends to be more positive. But there's essentially calling for mortgage originations in 2022 versus 21 to be flat, but the number of loans coming down significantly. And what we're seeing, you know, is this time different in the housing market? 1/3 of the buyers of existing homes is really institutional investors, possibly as an inflation hedge. And when you looked at recent home builders that reported, KB Homes and Lennar, out of 19% growth in their recent quarter has come from pricing. Only 1 or 2% has been on volume. So the backdrop is likely that the breaks are happening in the housing market. And again, it will take quarters before we have a real number conversation about credit loan loss exposure and non-performing loans.
Ken, great to catch up ahead of earnings next week. Ken Leon there of CFRA. This from Bank of America just moments ago. Here we go. We downgrade transports on waning demand and price dives. Given deteriorating demand outlooks and rapidly falling freight rates, we downgrade ratings on 9 of the 28 stocks in our coverage universe. Tom, they go on to say UPS to neutral from buy, the railroads to neutral from buy, Union Pacific, Canadian Pacific. These are the issues the equity market started to pick up on, Tom, in a bigger way more recently.
Bloomberg surveillance out front of this 2 days ago with Paul Sweeney, John. It's real simple. George Ferguson was grim. There's no other way to put it.
It's the transports, Lisa, it's the home builders, it's the banks as well. It's the banks even with higher rates in Europe, in the United States. They're not responding to that.
Are we pricing in a slowdown or a recession? What's the distinction between the two? Increasingly, that's going to be a focus for a lot of analysis.
Well, at the moment, we're certainly pricing in the former, aren't we?
Yeah,
Slowdown.
exactly.
If it becomes something worse, we'll see. Futures up 1/3 on the S&P, on the Nasdaq 100, a little bit higher too, up 1/3 of 1% there as well. Yields are higher through the week on the session as well, up a couple of basis points on a 10-year to 267.54. Earnings season just around a corner from New York on TV, on radio. This is Bloomberg.
Okay guys, as you can see, we need to cancel order to sell short Bitcoin. It took a while and it moved lower, substantially lower from the price I was looking to sell. Let's remove order to sell short, and please wait for another my message when I'm planning to sell Bitcoin. stay with me, stay online, and let's see what's going to happen with Bitcoin. Okay, I'm keeping an eye on Euro right now, on Canadian dollar as well. So stay tuned. Speak to you later, guys.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. And the place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Fascinating moment in this equity market. Truly, your equity market this morning, positive by about 1/3 of 1% on the S&P. On the Nasdaq right now, up 1/3 of 1% also. On the week, we are lower though, and there is this defensive bias that started to emerge. So let's talk about that. Bank of America downgrading the transports, 9 of the 28 of them in their coverage universe just moments ago on demand. And freight rates as well. We can build on that a little bit later through the program. But there's a story in the banks too. For 7 straight days, the KBW Bank Index is lower. Lower, 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 lower. And over those 7 days, it is lower by almost 10%. It's down by 9.28%. And this is happening, Tom, even with this developing in the bond market. The yield curve this week is not flatter, it's steeper. Yields are higher, not lower. And banks are still trading weaker going into earnings next week. Yields on a 10-year this week up about 30 basis points. At the moment, 267.16, higher by a basis point or so. Higher by 5 at the front end this morning. We get back up to about 250. But Tom, there's some steepness back in the curve, just a little bit, granted. But just to start to see banks fail to respond to higher yields, the prospect of higher interest rates going into earnings next week. If you look through the equity market beneath the surface, just lift the lid on the index, you'll start to see the economically sensitive parts of this equity market struggle just a little bit more.
John, what's so critical here is there's 24 members of the Keefe Bruyette Bank Index. It's a really, really good mathematical snapshot of American banking. But only 5 or 6 of those stocks are the stocks we talk about 95% of the time. And I think you've got to separate out Jamie Dimon in a 44-page letter or what Bank of America's doing from the mere mortals of banking that have to deal with an American economy with 8% inflation.
So JP Morgan, Tom, is down year to date by about 17%. They've got their own problems. When it comes to spending, they need to start to show in earnings next week what the returns will be on that spending. That's going to be the big effort for that bank next week. For the regionals, just the basic spread lending, Tom, you would think that higher rates would help them out. Not so if you believe this economy is going to be materially weaker over the next 12 months. It's the forward look on that, Tom, that we need from the earnings that start next week.
Yeah, I'm just looking here at a bank. I'm not even going to mention the name of the bank because it doesn't matter, but they're not a big bank. And the answer is they're down very much at JP Morgan equivalent. John, I'm trying to do the math here in real time. They're down 26%, John, versus 17% on JP Morgan.
Throw in the home builders.
Exactly. And the transportation, as you just mentioned.
Throw in the transports.
I had one
defensive.
John,
look at the defensive. Morgan Stanley said at the start of this week they're doubling down on defensives for this reason, this conversation we're having.
John, one of our staff had to move Grandma from Buffalo to Washington, and she had to move fancy because I guess she's in pretty tough shape. $900 to fly from Buffalo to Washington.
It's getting expensive, Tom. We joke about the flights and the prices, the cost of those flights. They're through the roof at the moment.
Everyone knows that. On radio and television, we welcome all of you here as we jump forward here. Spirited conversations here to end the week and dive into next week. And now, Anastasia Amorosa joins us, Chief Investment Strategist at iCapital. Anastasia, I want to talk to you about international relations. We'll save that for later in the conversation. How has your outlook changed as we begin the second quarter?
Well, Tom, it's changed quite a bit, but one thing that actually hasn't changed is the view that I've had on cyclicals for a while, and it was not the time to chase performance on cyclicals or performance on value. So we've actually been talking to investors about rotating out of those cyclical spots, and for a reason exactly what John just talked about, which is this is not a set of bullish rate hikes. This is not a set of bullish developments that the Fed is pulling back on liquidity. So I think there's a real concern right now about a slowdown that is consumer-led because things are getting too expensive and consumers may potentially be in a double whammy situation where prices are high and the Fed is hiking rates, which is making all the interest rate sensitive parts of the economy really prohibitive as well. So I think that's a big part of, that's been a big part of the outlook. And now the other thing, Tom, that I would say, we have a little bit of breathing room near term, I think, given how much valuation reset that we've had in Q1 and given how much positioning reset lower that we've had in Q1. And I think we're now in this stalemate situation, whether it's inflation, whether it's Ukraine. So barring adverse developments, I think we have a little bit of breathing room for the equity markets. But having said that, we can't ignore the longer-term risks of this consumer-led recession or slowdown, whatever it may be, that are building. So now I think is the time to right-size the risk in the portfolios. And so when we have those rallies, when we have the reset lower in volatility, I would be using that to actually de-risk parts of the portfolio.
Anastasia, when do you expect to start seeing a consumer-led recession or signs of it, if that really does come to pass?
Well, I think we're going to see in the coming quarters, probably this quarter and next, at least a slowdown. I mean, if you look at consumer confidence, for example, it is already at a 10-year low, and a one-year recession probability from this point of consumer confidence is about 65%. So I think we have some of the indications there. We also have expectations for consumers for their own personal finances that have fallen sharply. The buying conditions for durable goods have slumped, I want to say, to the lowest level on record. So again, I'm not surprised to see that the transportation sector is starting to feel that. So I really think we're going to start to see a slowdown in the next quarter or two. But to have this really be a recession, I do think that the Fed has to commit a policy error and has to over-tighten too much into a slowing economy. It's not the base case at the moment, but I think that's definitely a risk worth watching and a risk worth hedging.
Right now, what's the ballast of the portfolio? Is it the commodity sector? Is it long bonds after they've risen, the yields have risen so high, price down?
Well, first we should talk about the core of the portfolio, which for most people is some sort of S&P exposure or the NASDAQ exposure. And if you step back over the last 2 years, since January or February of 2020, the S&P is up 30% plus. And since March of 2020, we were lucky to put money to work at that particular moment, you're up 100%. So that's a huge return already over the last couple of years. So it's right sizing and reducing the risk in that. And I think one way to do that there was a time and a place to be long equities and be long only and have this one directional exposure. But now we're talking about layering some hedges. And maybe you sell away some of the upside by selling a call option, and you buy and use that premium to buy a put option, so you do have some sort of protection on the downside. So I think that right there is one of the more important things that investors can do. And then it's about sectors, and then it's about where else can you get yield, Tom.
What's the price to hedge right now? Is it outrageous? Is everybody on board, and have they knocked up the price to hedge?
No, it's not outrageous, and that's exactly why I'm talking about it today versus, let's say, a month ago. When you had the VIX that spiked to 35, that was definitely not the time to be talking about putting on this downside protection. But now at VIX, 20-ish or so, now is the time to be looking at some of those put options. I mean, it gets very nuanced and very dynamic very quickly, but you want to find the points on the volatility curve where you can sell rich call premium and you can get put option that's reasonably priced.
Anastasia,
but it's definitely not outrageous right now.
We've called on you over the years for the perspective of your heritage and the travels you've made, particularly to the Black Sea. This is a weekend where Odessa is under unique threat. To you, what is the Odessa distinction now? What does it mean for Ukraine? Or for that matter, what does it mean for Russia?
Well, it is a dire situation, needless to say, in Ukraine. And, unfortunately, there's been almost an international concession right now that Russia is not likely to succeed broadly in Ukraine, but it seems like Russia has a pretty good chance of succeeding in the Donbass region,
in the Black Sea,
in the Black Sea region, and really connecting that. So perhaps Russia is not going to get Ukraine as the buffer zone that they were really hoping for, but it seems like it's pretty likely that they might succeed at reuniting the southeastern part of Ukraine and carving that out as the buffer zone they so desperately wanted.
Anastasia, just awesome, as always, and fantastic to catch up with you. Thank you. Anastasia Amoroso there of Vine Capital on a situation in Ukraine and, of course, on the broader market as well. Should you buy the weakness right now in some of the cyclical parts of this equity market, Tom? Do you want to buy some cyclicality, given that move lower? I mean, that's the conversation with the guests going into earnings season, isn't it?
And Ken Leon in his note as we get ready for earnings next week saying the big banks are undervalued. I mean, there's a lot of opinions out there. Look at Dan Ives yesterday on fire over the cheapness of, I said as a joke, are the big techs the new consumer staples?
Resetting the valuation to lower into earnings. That's what we're doing, Lisa, particularly for the big banks.
What I find fascinating is when you start to talk about potential hedges or the ballast, you start to talk about rearranging sectors. It gets much more granular than ever before than overweighting or underweighting stocks or bonds. And I take a look at, for example, retail. When you say lean into cyclical weakness, does that mean buy retailers that are down 11% year to date versus the some 6% decline of the S&P? How much do you lean into that when we're expecting that weakness to transpire throughout the year?
Market timing is so difficult. Christian Muller-Glissman at Goldman put out a note this morning, Tom, and this line I know you'll enjoy. This will resonate with you. Timing bear markets is even more difficult than forecasting recessions. And he said this: timing the market competes with time in the market. You try to time the market, it competes with time in the market.
Brilliant.
And as you know, Tom,
Absolutely
looking through the history of equity markets, time in the market is everything.
It is everything. You got to be in the game to play. Gina Martin Adams of Bloomberg is just outstanding on that concept. John, to what I talked to Anastasia Amoroso about, to me, the key thing with Odessa, get out the map to the southwest of Odessa, way over on the west side of this Ukraine Black Sea. They are a stunning only 100 miles from in Romania where NATO would set up naval shop. 100 miles, John.
And Tom, your best place to talk about this in just 30 seconds if you can, that body of water, Turkey's role in it at the moment, just in terms of being a mediator for conversations, negotiations, where is it now?
Where it is they have some kind of original power. I don't think anybody knows what Mr. Erdogan's power is. But yes, the Bosphorus Straits, as always, going back to the beginning, is key.
Tom Keene, Lisa Bramett and Jonathan Ferro on TV and radio, counting you down to the opening bell in just a couple of hours' time with equities lifting a bit, up 0.4% on the S&P. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. In Ukraine, officials say a missile attack on a railroad station filled with refugees has killed dozens of people and wounded at least 300. The station is on the eastern flank of the territory held by Ukrainian forces. Meanwhile, the war is entering a new phase. It's likely that Ukraine has just weeks to acquire and deploy new weapons for fighting in the eastern part of the country. Global food prices are rising at the fastest pace ever. The war in Ukraine has choked off crop supplies, leading to panic about shortages of key staples. According to the United Nations, food prices rose some 13% last month. Ketanji Brown Jackson will make history this summer when she becomes the first black woman to take her place on the U.S. Supreme Court. The Senate confirmed her nomination by a vote of 53 to 47. All 50 Democrats voted in favor. So did 3 Republicans, Susan Collins, Lisa Murkowski, and Mitt Romney. And in Costa Rica, a DHL cargo jet broke in 2 when it skidded off the runway after an emergency landing. The 2 pilots escaped without serious injuries. They had reported hydraulic problems with the Boeing 757 just moments after takeoff and returned to the airport. Next year, Tesla will start production of 3 vehicles that have fallen behind Elon Musk's schedule. They are called the Cybertruck, the Roadster, and the Semi. Musk revealed the plans last night at the opening of Tesla's newest factory in Austin, Texas. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Everyone you meet in Port Harcourt has stories about what they call black soot, caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
I think inflation has a lot of momentum. I think wage growth is, it's a very tight labor market. Wage growth is very strong. The Fed is going to have a very hard time slowing down the machine, and it has to admit that it has to slow the machine a lot. I mean, we don't want a recession.
Olivier Blanchard there, the former IMF chief economist. Fantastic to hear from him in the last 24 hours on this show, just yesterday. Futures this morning, and good morning to you, up 0.4% on the S&P. There's a lift going into Friday's opening bell, a few hours away. On a week where we are lower going into earnings season as that begins next week. We kick things off with JP Morgan on the 13th. Yields a little bit higher on a 10-year to 267.54, up 2 basis points. Olivier was talking about wages there. This story crossing the Bloomberg yesterday, Tom, written by Brendan Case. Walmart ramping up pay for its truckers as the retailer seeks to shore up staffing amid a nationwide need for drivers. They will be able to earn between $95,000 and $110,000 in their first year at the company. Tom, that's the result of a tight labor market. You get to earn that kind of money.
Well, you get to earn that kind of money, and across many other industries, it's like, what are we waiting for? And, basically what it comes down to is, A, profit disappears, the margin debate, or they pass on these labor increases into price. It's either or.
26% higher than the previous average for new drivers. Just fantastic that people get that kind of pay rise, Tom.
Yeah. Let us look at a chart right now. We do that. Lisa touched on this earlier. Kriti Gupta expands further on food. Kriti, what do you have?
Yeah, well, the story of the morning is going to be those food prices hitting a record. We're looking at the UN Food Price Index. This is really important. You guys talked about the Black Sea in the last block. This is really what the UN report is citing as the kind of driver behind the latest leg higher when it comes to food prices. The idea, I'm going to directly quote this here, that there's reduced export supplies amid the ongoing conflict in the Black Sea region. Of course, that has a lot to do with simply where those grains go and where vegetable oils go, the two main exports coming out of Ukraine and going through, like you mentioned, Tom, Turkey in particular. The question here is, what is the historical precedent? Because if you look back about 10 years, there's two spikes, the one in 2007, the inflationary spike, and then the one in 2010, 2011, which is really the combination of that post-recessionary recovery and a crop crisis. The difference is simply how long does it take to get that price relief? And that's the question a lot of people are going to be asking this morning.
Kriti Gupta, thank you so much. Futures up 17. Dow futures for John Farrell up 147. And the VIX, as John said, we've come back from that 18 love of 10 days ago, 21.23 on the VIX. Now we attend her Paris. And at Bloomberg, that can only mean Carolyn Conan, who has provided leadership at our Paris operation for years. And we're thrilled she could join us with the Tower of Eiffel in the background. Carolyn, good morning to you. All the focus is on the right, Le Pen. All the focus is on Mr. Macron. Whatever happened to Mr. Mitterrand and Mr. Chirac's left?
The left wing has actually almost disappeared in this election campaign. The far left, Jean-Luc Mélenchon, could actually do about 15% this Sunday for the first round, but clearly the French have been veering right in this election. And as you may have seen over the past week in the bond market, the French bond market, with the spreads widening and the CAC 40 lower this week, there is some anxiety about the race tightening between the two frontrunners, the incumbent President Emmanuel Macron and Marine Le Pen from the far right. In fact, some polls recently showed that the lead would only be a few points in the second round.
Right. Carolyn, what happens? Let's say we have this election and it's like Macron and Le Pen and all that, and we bring surveillance over as we are for the second election coming up in a week or two. What do they do between those two elections? How do they campaign? What changes?
So clearly the delicate phase for investors this time around, unlike 2017, will be between the two rounds. So between this Sunday and April 24, when you have the runoff, because all the polls at the moment are showing that Macron would win, but only with about 50% of the votes, with Marine Le Pen given about 48% of the votes for the runoff. And you have to remember, Tom, that there is a 3 points margin of error. So clearly, this is a delicate phase. There will be a debate between the two remaining contenders on April 20. So a lot can happen there because Marine Le Pen, as you know, has refocused this election and this campaign on the issue of purchasing power, which is obviously at the heart of French people's concerns given the current inflation, especially in the energy sector.
Caroline, this came up with former President Trump about the accuracy of polling, that a number of people did not want to say that they were going to vote for him. So a lot of the polls undercounted the support leading up to the election. Is there a similar phenomenon taking place in France?
Analysts actually say that we shouldn't worry as much as in 2017, when you actually had an actual risk of far left versus far right in a runoff with Jean-Luc Mélenchon from the far left and Marine Le Pen from the far right. But anything is possible. You saw Brexit, you saw Donald Trump. So clearly, the pollsters have also a very hard time to measure abstention, the turnout. And this is going to be key because the problem is that a lot of the French thought that this election was already done. Macron would be re-elected and it would be an easy victory for him, another 5 years of mandate for the current president. And that's actually causing some French to think that it's not worth going to vote on Sunday. It's not worth going to vote for the runoff because it's already, the games are done already. But when you've seen Brexit, when you've seen Donald Trump, anything can happen. The lack of suspense could actually be a bad thing for Emmanuel Macron. He's going to mobilize his troops between the two rounds if he really wants to have a good margin and a victory on April 24.
Let's not lose this moment, TK. Keep the shot up of Caroline. Tom, the French like to complain about the English weather when they live in England. I've known Caroline Conan for more than 10 years. She used to complain about the weather too. What is this? At 2 p.m. in Paris?
Seriously?
It looks like 7 p.m. at night. Caroline, what is wrong with the French weather in April?
You picking a bone?
It must be the anxiety we're seeing in the markets recently. Clearly, the weather forecast doesn't help for voter turnout. So if the weather improves on Sunday, perhaps, you know, Emmanuel Macron and Marine Le Pen and all the 10 other candidates will actually manage to get some of their troops to vote on Sunday.
Caroline Conan, an old friend of ours, thank you so much. Thank you for running us through all that.
Thank her for scouting out, John, that ensemble
position.
surveillance.
Hold on a second.
That shot. Special coverage Sunday, Lisa. Let me get through it.
Go ahead.
April 10th starts at 7 p.m. in London. I think that's 2 p.m. in New York. And in the middle of the night in Hong Kong, if that takes your fancy, coming up this weekend. Yes, Lisa.
Wait, so who are you trolling? Were you trolling Tom?
I've known Caroline for a long, long
the road
time.
Trip?
And when we used to work in the London office together, Caroline used to complain a lot about things in London, including the weather sometimes as well. And I just thought I'd take the opportunity to convey to the French that obviously they suffer from the same thing as the English sometimes, which is bad weather. And because that looked brutal.
If you want to respond, it's at Pharaoh TV.
Oh,
sure, I mean, I'm sure the French are going to get involved in a minute. From New York, this is Bloomberg.
estudio, en nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Equities look relatively attractive given the environment we're operating in. If things turn out as markets are priced at the moment, we're going to have a really significant yield advantage for the U.S.
The market knows that QT is coming.
We went very quickly from exuberance on growth to now gloom.
When Wall Street gets bearish, that's generally a sign to get bullish.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on radio and television. Not your usual Friday. John, as we mentioned yesterday, a massive setup to a massive week next week.
The CPI next week, Tom. A lot of people on Wall Street, most people on Wall Street looking for an 8 handle. Then earnings from JP Morgan the day after that. Then the policy response from the ECB. It's a tough spot for a central banker right now. And for many people, Tom, they got themselves into it.
Away from the tension in the Ukraine, which is tangible, John, we've got to go to what matters this morning. And to me, it's the Bank of America downgrade. They look at transportation. They look at other parts of the American economy, and they see demand destruction.
We can go through it, Tom. So Bank of America this morning downgraded 9 of the 28 transports in their coverage. The semis have been weaker. The home builders have been weak all year. And the banks more recently, 7 straight days of losses on the KBW Banks Index, Tom. That's not about curve inversion. Yields are higher. The curve's steeper this week. This is about potentially demand destruction and an economy, the forward look, which is starting to suffer, for many people at least.
Let's look at the tea leaves, the signals that we see in this raging debate over recession, over where we're going to be. Forget about Q3 2023. How about Q3 2022? And everyone knows in the equity land that Lisa Abramowitz knows credit. What is credit in the spreads, Lisa, signal?
Frankly, they've been signaling strength. They've been signaling not necessarily weakness or recession, but resilience in companies. You're starting to see that crack a little bit with a little bit of a move away from the riskier credit. Again, though, from the fundamental story, you talk about transports, you talk about retail. How much is some of the weakness in the equity space driven by softening? And Tom, how much is it driven by Walmart's announcement that it's going to pay truckers, as John was mentioning earlier, up to $110,000? How much is this margin pressures, which is a very different story than a near-term slowdown. And that's, we're going to have to parse out those types of messaging as we parse through the earnings.
John, we got to go to Damien Sassower right now. John, you and I would do this with Damien. Sri Lanka, and this is the jump conditions, John, and maybe some of the shocks we're going to see next week, whether it's the United States or something as emerging market as Sri Lanka, with a massive lift in interest rates. They go out from 7.5% to 14.5%. John, those are those jump conditions that are the instability of the second quarter.
Did you see Russia this morning? They went the other way. They cut rates 300 basis points. It'll be interesting to see what happens at the end of this year, Tom, when these central banks face a different challenge, particularly the Federal Reserve. At the moment, the Federal Reserve does not see a trade-off between the economy and inflation because they believe the economy is so strong. Later this year, is there a different test? Does it become an either-or? For central bankers at the Fed right now, it's not. Is it later this year?
John, I start with currency this morning. Ibrahim Mabari helping us start strong this morning. And everything I look at is nudges, little itty-bitty moves, but they scream resilient dollar.
Let's whip through it, Tom, and start with the equity market. Up 1/3 of 1% on the S&P, on the NASDAQ 100, up 1/3 of 1%. Also, up on the session, down on the week. Down on the week on the S&P by about 1%. Yields higher on the day, higher on the week, much higher, by about 30 basis points over the last 5 days. 267.54 on a 10-year. And just quietly, crude has pulled back. It's up today by 1%, but we are back with a 97 handle, Tom, on WTI at 97.10. On Wall Street, I want to frame this in the appropriate way. For a lot of people, this war is not over. For everyone, this war is not over, particularly for the people in Ukraine. But as far as the market is concerned, from a market perspective, so many people, Tom, have moved on. They've moved on in this market, and quite quickly.
It's always the trouble. I mean, this happened in 39 and 40, and the capitalism continuing to move, even into the depths of World War II. I'm going to call it the Guadalcanal low of late 41, 42, John. It is a reality that capitalism continues forward.
It's the forward look. It's got to be anticipatory. Sometimes it anticipates the wrong thing, but the more fund managers you speak to, the PMs, Tom, they're moving on from this, and you can see it. This market's become less sensitive to the incoming information over the last couple of weeks.
A busy weekend for weekend reading in Global Wall Street. Of course, a focus on the Masters. I know Bloomberg Radio has some good coverage of the Masters and, of course, the French elections as well. We get a summary, a start to the weekend with Scott Clemens, Chief Investment Strategist at Brown Brothers Harriman. Scott, Brown Brothers Harriman is known for quiet money. How do you strategize on quiet money given the cacophony of news right now?
Well, no offense to your profession, Tom, but you have to kind of listen through the news and listen through the headlines and the inevitable price volatility that this cacophony creates and focus on the underlying fundamentals. Economically, that's household spending, household consumption is 68% of GDP. When it comes to the equity market, it's really corporate earnings. That's the fuel. We're going to learn more about that the next couple of weeks. But there are certainly a lot of moving parts that have created a lot of price volatility. And we have cautioned our clients not to expect those to go away. To Jonathan's point, even as investors move on beyond what's going on in Russia and Ukraine, there are still a lot of other moving parts of this economy, Fed policy perhaps being foremost of them, that's likely to perpetuate this volatility.
Scott, we've seen the more cyclical parts of the equity market, the economically sensitive parts of it, suffer recently. It's got softer, weaker, lower, negative. And I just wonder from your perspective, when you think about buying those kind of parts of the equity market, what drives that decision?
Well, I'm reminded of an old adage in financial markets, and it may be true of life as well, that whereas the most anticipated risk is least dangerous, the least anticipated risk is most dangerous. Right now, given so much talk about an economic slowdown, and we're optimistic on that, by the way, we don't buy the pessimism of a recession in 2022. But at some point, if that weighs on market sentiment enough and drives down the valuation of more cyclical parts of the market enough, that might provide a buying opportunity. We're not close to there yet in terms of the cyclical parts of the economy. They don't play a large role in our portfolio at present. The valuations just aren't compelling, to speak generally.
Scott, as we wait for earnings that start next week with JP Morgan on Wednesday, how much is margin compression a good thing, especially as some of the lower income workers see bigger wage gains, as we saw from the Walmart truckers and frankly from the Atlanta Fed wage data that just came out?
It's a good question, Lisa, and I think there's a big silver lining in all of the hand-wringing about rising average hourly earnings and wages. I mean, forgive this simple-minded economist for drawing the following conclusion, but if more people have more jobs and there is more money in those people's pockets, keeping in mind once again that consumption is 2/3 of GDP, that sounds like a pretty constructive economic background. So I readily admit that there's margin compression on the other side of that trade, but margins are compressing starting from pretty high levels. Margins historically for the S&P 500 operating margins have ranged between kind of 8 and 10%. In the earnings rebound coming out of the worst quarters of the pandemic, margins rebounded to closer to 12 to 13%. So there's some headroom there, and I'm expecting that we'll have another upside surprise in the first quarter in general across the S&P 500 simply because margins have been so healthy to begin with.
How much do you hear Bill Dudley's voice in your head that if we do get that upside surprise, that means a downside surprise when it comes to the Fed hammer?
Well, the thing that surprised me the most this week in the release of the Fed minutes was that the Fed seems to be a little bit more concerned about inflation than I would have anticipated. And that finds the form in the comments that were made, and Lael Brainerd emphasized them this week, that the Fed needs to probably accelerate the reduction of the balance sheet. I did not anticipate that to happen quite so soon in this tightening cycle. So I think 3 months ago, I would have said time is the Fed's friend. They've got time to restore more normal monetary policy. It seems that maybe they feel a little bit of that time pressure, and that a very strong corporate earnings season, if it's accompanied by companies talking about price increases, may actually accelerate that.
Scott, fantastic to catch up. Scott Clements there of Brown Brothers Harriman. It's the reality of the situation for central banks at the moment. Inflation is surging in many parts of the world, Tom, off the back of what's happening with food, energy, and in some places, many places, labour markets are really tight as well. That's what the Federal Reserve faces. They believe the labour market is really tight. They want to respond. But Tom, as you pointed out, this move in Sri Lanka is a monster move, isn't it?
It's look, why is it any different than the Walmart wage move that Lisa and you mentioned? I mean, John, this is a phrase, folks, that drives me nuts. Mathy people talk about jump conditions, but they happen in real life with real life consequences, and we're seeing that, John. I bring up Sri Lanka just because I think we're going to see a lot more of those kind of jump conditions.
Everything in all these stories are so connected at the moment. I mean, to Lisa's point earlier in the program, she said this repeatedly, food prices absolutely surging. And Lisa, at the epicenter of an election in France, the first round of the vote this weekend. That's at the epicenter of what's going on as well. It's the cost of living. It's the story of Europe. It's the story around the world, the story here in America as well.
How do central bankers respond to the fact that wheat exports aren't getting off the ground from Ukraine, right? I mean, here's the issue, right? Do you just have to crimp demand? Do you have to basically push consumers to do less when it comes to what they spend? Yeah. And if that's the case, what's the ramification? With Sri Lanka, it's also a defending of their currency. How much is that going to come into play as you deal with the surging inflation globally and, frankly, dollar strength?
On a Friday here, John, really humbled by the dedication of our listeners on radio, our viewers on TV, and somebody emailed in and asked if Carolyn Conan was on the balcony in Paris where Brahma was during the COVID thing. I mean, we all know, you know, Lisa was ensconced in Paris, and the similarities are stunning.
This has got to be one of your buddies out on Twitter, because the handle is Spurs1692.
Got that right.
The Paris shot was definitely the same view as from Lisa's apartment window.
You know, it's just like, I mean, I'm sorry there. Carolyn Conan at Brahma's apartment. That's all there is to it.
Etsy is selling a $5 plastic Eiffel Tower that I will tape to my window next time.
If you just done some research on that.
Yes, of course.
Sunday night.
That works perfectly.
Sunday night, France decides.
Are you getting a flight out there, Tom?
I'm working it aside.
To my apartment.
I'm hoping Ellen is watching.
We'll just go round to Brahmo's.
Yeah, exactly.
On Sunday evening.
I'll have an Eiffel Tower.
Show from
thank you, New York.
From New York City. You try and sell that to Mrs. Keane. Work trip. You're coming with me up the road.
Got that right.
I'll provide the wine.
This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. In Ukraine, officials say a missile attack on a railroad station filled with refugees has killed dozens of people and wounded at least 300. The station is on the eastern flank of the territory held by Ukrainian forces. Meanwhile, the war is entering a new phase. It's likely that Ukraine has just weeks to acquire and deploy new weapons for fighting in the eastern part of the country. For the first time, the European Union has targeted Russia's crucial energy revenues. The bloc agreed to ban Russian coal imports, and Japan will follow. It's the fifth round of EU sanctions since Russia invaded Ukraine. The move also includes a ban on most Russian trucks and ships from entering the EU. And Russia's central bank unexpectedly cut its key interest rate, the most in 2 decades. The rate was slashed from 20% to 17%. That's seen as a sign of confidence. The central bank can reverse some of the monetary tightening it imposed after the invasion of Ukraine. Treasury Secretary Janet Yellen is counting on the support of corporate America for a global tax deal to help win passage in Congress. But big business is nowhere near backing the plan. Bloomberg spoke to executives at 8 US-based multinational corporations. They say that there's too much they don't know about the deal, whose fine print is still being negotiated. And next year, Tesla will start production of the 3 vehicles that have fallen behind Elon Musk's schedule. They are called the Cybertruck, the Roadster, and the Semi. Musk revealed the plans last night at the opening of Tesla's newest factory in Austin, Texas. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
The war in Ukraine rages on.
President Putin's invasion is brutal.
Turn to Bloomberg for up-to-the-minute reporting from around the world and analysis of what it all means to you.
The intention here is to increase the pressure on the sanctions front.
I think the United States policy is that the sanctions continue until President Putin is no longer there.
For continuing coverage from Ukraine and around the world, keep it tuned to Bloomberg Television and Radio.
That the Russian Federation was suspended. Everything what happened was very logical, and it's kind of a catharsis for the Human Rights Council, and I'm quite satisfied with the result.
That was the Ukrainian ambassador to the UN from New York. Good morning to you. Futures positive on the S&P and on the Nasdaq too. On the Nasdaq 100 up 0.2%. On the S&P up 0.25%. Bit of a firmer end to the week after a soft week so far. Yields up again by 3 basis points on a 10-year to 268.49. Crude up a little bit by 1% to 97.16. And going into an election, the first round of the vote in France, Euro weaker by 0.2%. Tom, euro dollar 108.61.
It'll be interesting to see. And again, on the currencies, if there's one thing I'm watching, it's DXY, the blended major trade index, folks. We haven't printed 100 yet, but we are right there. 100. It's like Dow 10,000.
Close, Tom. Close.
You know, Dow 10,000, John. It's
Is that what it's like?
It's like a benchmark. Yeah, it's like it's a benchmark.
Have you got a cap for DXY 100?
No, I don't. No, I don't. We're going to do some merch, though, for that.
You're going to do some merch for the
Dow
FX
merch.
market.
Dow Jones Industrial Average merch. We're going to do that. We have had a stunning week in discussing the Western response to this horror in Ukraine. We finished strong on this Friday with Christina Kaveen, who is what America is about when you come out of school and you join this strange thing called the Foreign Service. Her first tour of duty was in Paris, France, which was heavy lifting, but for that she has spanned the world for the United States of America, being a diplomat. She is U.S. Chargé d'Affaires to Ukraine right now. Christina, what are the ramifications to all of this if Russia not so much takes eastern Ukraine, but takes the shores of the Black Sea? What will be our diplomatic response to something as shocking as their taking of Odessa?
Well, first of all, I would say, obviously, Russia's attack in the south of Ukraine and also their blockage of the Black Sea is a significant barrier to trade, not just with Ukraine, but with other countries that are literal states of the Black Sea. So the economic costs are significant. Right now, the Russians have not, their invasion of Ukraine has not gone according to plan. I think they thought that they might be able to take Odessa easily within a matter of weeks, and clearly that hasn't happened. In fact, Russia has had to pull back from its central position and its approach on Kyiv. And so far, they have not been able to get, they have not been able to take Mykolaiv, which is to the east of Odessa and would have to be taken before they could take Odessa. So I would say that it's a little early to suggest that Russia would be able to take Odessa, given the fact that they have not succeeded so far in most of their plans.
I agree. That's a fair statement. And I'm going to call you Ambassador because of your years of public service to the country. Ambassador, my colleague Jonathan Farrow asks of Turkey, the Black Sea, the Bosphorus Straits as well. What is the present relationship of Mr. Biden and Mr. Erdogan?
President Biden and President Erdogan have a good relationship. They talk frequently, and they talk about the many important issues that Turkey is a part of. I would say, too, that Turkey has been quite supportive of Ukraine. President Zelensky also has a good relationship with President Erdogan, and Turkey has actually been hosting some of the negotiations between Ukraine and Russia. So I think Turkey has been playing a positive role in this. And finally, as a NATO ally, of course, and part of a unified NATO that stands against Russian aggression, Turkey has been supportive.
Christina, there's been an ongoing conversation about the potential for a no-fly zone or more aggressive offensive weapons given to Ukraine. There has been a shift in the type of military weapons that are being given to Ukraine. How much do you consider this an escalation, or do you think that the line that determines escalation has shifted with what we saw out of Bucha?
Well, I would say, first of all, it's Russia that's causing the escalation. So what we're trying to do is help Ukraine defend itself. And honestly, the Ukrainian foreign minister has said to me more than once that any weapon that's used in Ukraine to defend Ukrainian territory is by its nature a defensive weapon. So what we're doing now is taking all of Ukraine's requests for various weapon systems and seeing how we can match them with what we have in stock and what we think Ukraine could best use right now if we give it to them immediately. And we've already given them a very large supply of both anti-air, anti-tank, ammunition, defensive things like body armor and other material. But we are looking at further systems that they will be able to use to help not just defend against Russia, but repel them from the areas of Ukraine that they still continue to occupy.
Christina, you talked about trying to do it quickly, immediately, and certainly Foreign Minister Kuleba of Ukraine has been emphasizing the need for speed as Russia regroups. How big is this window of time?
Well, we are concerned, as the Ukrainians have said, that President Putin is not withdrawing, but regrouping. And when he regroups, it is believed that he may be making an offensive, a heavy offensive in the east, perhaps in the Donbass. So it is a relatively short period of time that Ukraine has to make sure that they're ready for that. But we, since before the war, actually, we have been flowing weapons into Ukraine. In fact, several months before the war started, we had seen what Russia was starting to do, and we started to flow weapons in before the war started. And then after the war started, of course, we have flowed in even more. So we're getting weapons to Ukraine every single day. However, of course, Ukraine needs as many as they can possibly get, and we're doing our utmost to try to get them as much as we can, as soon as we can.
Christina, just briefly, what is the difference between defensive and offensive weaponry? What is the difference?
Well, again, I would go back to Foreign Minister Kuleba's view that any weapon that is in Ukrainian territory defending against attacks against Ukraine is by nature a defensive weapon.
Seems to be some disagreement on the international stage, though. Christina, thank you for your hard work throughout all of this. Christina Kaveen there from New York, Tom. That is the focus for all of us, I think, looking down to Washington, D.C. Some confusion as to what is defensive and what is offensive and the risk of escalatory steps along the way.
In the tension right now, it's not that we've gone light on it today, but there's so many other distractions. But John, the tension into the weekend speaks to the tension we heard in our various conversations this week. And it's about what do we project, to your great question on offensive and defensive. What do we project to assist Ukraine at this moment?
Looking ahead and looking forward, we will do that next with Jan Hatzius of Goldman Sachs on the outlook for the economy, for rates, the Federal Reserve, and a recession call in the mix. We need to get into that, don't we? This is Bloomberg.
know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
I think what we've seen during this period of time is that communicating via video is not a fad, that we are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Live from New York City this morning, good morning on TV and on radio, rounding out the trading week with a day of gains potentially up 0.25% on the S&P, on the Nasdaq up 0.2. We'll see if this sticks going into the opening bell, with yields higher on treasuries to 266.97, up around about a basis point. No drama on the session, some drama on the week, higher, much higher by about 30 basis points. And as for that curve inversion, yesterday's news, the curve positive through much of this week, the curve a bit flatter this morning. Looking at the move elsewhere, looking ahead to next week, CPI next week, 8.4% is your median estimate, Tom Keene, year over year, 8.4%.
Stunning statistic, and of course the x-axis there, the duration of this inflation. Remember, John, it was going to go up and come back quickly? It was transitory.
Yeah, good times. They were good times, weren't they?
For 2 cups of coffee or that.
Didn't
right
last
now,
long.
Time is such importance. We're going to dive into this right now. It is amazing in the housing economy to think of the housing dynamics and the prediction that the moonshot in housing will end. That was where I first met Jan Hatzius, now chief economist at Goldman Sachs. He owned the high ground on the last housing boom. Events are so important. We're not going to talk about that on this Friday morning. With Jan Hatzius, we're going to talk about the Goldman Sachs call, the gloom of recession, and the global and American labor economy. Dr. Hatzius, thank you so much for joining us again. I've got to go to labor. I want to go Dudley McKelvey from years ago when you were a young upstart at Goldman Sachs, and go back further. Your analysis on where we are now with this strange labor economy goes back to the late 40s and the early 50s.
That's right. So if you look at the gap between the total number of jobs and the total number of workers, where we've got the most overheated labor market going back all the way to the early 1950s. Best way to see it, 11 million open positions, 6 million unemployed workers. That 5 million gap is a record, both in absolute terms and relative to the size of the economy. So I think that's really what the Fed's going to be focused on.
Politicians want an employed America. If I'm elected, free beer. If I'm elected, a job for all. What's wrong with an overheated labor economy?
Well, if it generates wage growth that's more than what you can sustain with maybe 1.5% to 2% productivity growth and a 2% inflation target, then ultimately you get higher inflation that erodes the real wage of workers. So that's ultimately not really in anybody's interest. And right now, you know, wages are growing in the 5 to 6% range, and that is too fast.
Jan, you're not a recessionista. You say we think a recession is far from inevitable, but you are looking for some severe deceleration in this economy. Just lay out the forecast for us, GDP at year end, where you think we're going to land, and why you think the Fed will still be pushing on, even with those numbers.
We're expecting a slowdown from 5.5% growth last year to just under 2% this year if we look at it on a fourth quarter to fourth quarter basis. So basically from very far above trend, very strong V-shaped recovery to something around the economy's trend pace. And the Fed will be pushing on because the labor market is overheated and inflation is too high. So I would say that the reason, one very important part of the reason why growth is going to be slower is that the Fed is trying to slow things down.
So, Jan, you'll have GDP with a one handle by year end. Where's CPI at that point? I just want to understand the mix, inflation to growth.
I think CPI around 5% for, you know, core PCE.
That's
we
tough.
have a little over 4.25%. So, you know, still well above the 2% target, though lower than now, because I do think that some of the inflation is going to come off in the goods sector as we go forward.
Well, that's just mechanically. We should see a mechanical peak later this year, Jan. I think most people are looking for that. I'm trying to work out next year, just in terms of where this Fed funds would peak, what would influence that call for you? What would you be looking for through the next 6 to 9 months?
Well, I think if the economy does not slow, and if we, in particular, don't get a pretty substantial slowdown in employment growth, then you'd be looking at something, you know, that could go significantly higher to the 4% plus range. Our baseline is pretty close to market pricing, a little over 3%, but it could be significantly higher than that if we see continued increases in this overheating.
Hold on a second. Jan, I want to sit on that for a second. A 4% terminal Fed funds rate. When do you see that being a possibility if we continue to see strength in the labor market?
I think in 2023, it's a possibility. You know, again, our baseline is that by the middle of 2023, we'll be at a little over 3%. But, you know, there are obviously risks around that. On the downside, if we get a, you know, much sharper tightening in financial conditions than they want. On the upside, if the economy stays stronger or you fail to get additional tightening in financial conditions. I mean, the goal for the Fed is to bring about a gradual tightening in financial conditions. Otherwise, they're not going to achieve the goals that they have, which is to stabilize the economy near full employment, but not in an overheated state.
So do you agree with Bill Dudley that the Fed has to essentially cause stock prices to decline?
It doesn't have to be declining stock prices, but it has to be some combination of weaker stock prices, higher interest rates, a stronger currency, and wider credit spreads. And these things, you know, can be substitutable for one another. We look at our Goldman Sachs Financial Conditions Index, and those are the different components in there.
I was looking at the rates call over at Goldman, just in terms of where treasuries will be. Inversion year-end next year, and again the year after that. Jan, what would that mean from an economics perspective? Just your relationship with the rates team and their call year-end this year, the year after. What does that mean?
Well, they build in the call from the economics team on the real economy and on monetary policy, and we have the funds rate a little over 3% and 10-year yields a little under 3%. So yes, mild inversion. I would also say that if you look at market pricing for the federal funds rate, of course, that already shows an inversion. Market pricing goes up to a little over 3, and then it comes down to about 2 in sort of starting in late 2023. So the market is saying there's a meaningful risk of renewed rate cuts because the market sees a meaningful risk of a recession.
There's a missing ingredient in this conversation, and it's the labour market. It's where you started with Tom. 3.5% is where the Fed is at year-end. Again, year-end 2023. Given what you expect, the kind of deceleration you're looking for in the economy, the persistence of inflation as well, the work the Fed needs to do, what do you see happening, and how out of sync with that is that unemployment target with what you're looking for?
Well, we actually have the unemployment rate fall a little bit further to 3.25% despite the weaker growth forecast. I mean, I think the 3.5% forecast from the Fed is already a little bit stale, probably, just given that we're already down to 3.6% since the summary of economic projections was published.
Yeah, and this is really important, though. Everything you're expecting, and you still expect unemployment to keep falling, doesn't that just tell you that actually they've got to go higher with interest rates?
Well, I think they do have to go higher with interest rates.
But
yes.
higher than you're anticipating.
Well, possibly, although it's not just about the unemployment rate. I mean, this overheating in the labor market is, on the demand side, it's unemployment, but it's also open positions, or jobs, but also open positions. We do expect that open positions probably will come down somewhat. So in an ideal world, what the Fed would do is slow the economy to a degree that leads companies to, delay or shelve some of their expansion plans, thereby bring down these extremely high open positions without slowing it so much that you get substantial layoffs.
Yeah,
so that's what you're shooting for. Is that going to be, available? Is that what actually happens? We're going to have to see. It's going to, I think, require some fancy footwork from the Fed.
Yeah, I see why it's a narrow path to the soft landing. How high do rates go before there's a recession? Can we handle a 4% Fed funds rate without a recession occurring in the United States?
Well, I think the higher rates have to go, and especially if rates have to go significantly higher, because you see even clearer signs of overheating, the higher the recession risk goes. So, if you go up to 4, the risk is higher than if you're in the sort of low to mid 3s.
Yeah, and the Twitter's lighting up here. The emails are coming in. The pandemic's over. One of the glimmers of joy within the pandemic was you and Pharaoh and me going back and forth with no tie on. You're coming in today, tie. We need to know, does Solomon force you to wear a tie today? Is this the new Solomon regime?
I just wanted to celebrate that I'm coming back into this office.
I didn't know it's just for us.
We wanted to know. David had nothing to do with this, right?
He did not have anything to do with this. This is a personal celebration.
There's your break exclusive today with Jan.
Hey, Jan, that was a clinic. Just fantastic to get your thoughts, and the whole of the team over at Goldman, Tom, and what they're looking at the moment.
Oh, I think it's so important. And, we didn't get to it with Jan. We'll have to get him back here as we move on into 2022, John. One of the great things with Hatsius is he owned the housing market last boom. And I'm fascinated to know what his team sees in the coming months in this housing market that just refuses to go
He's
down.
next to you. You got 45 seconds.
I got 45 seconds. When does this housing idiocy break?
Well, I think it will slow, but I think a lot of the weakness that we're going to see is, a lot of the slowdown, I think, is going to be a decline in demand, but supply is actually a much more significant constraint than in the last cycle.
Huge issue.
Bonus round, Tom. That's my gift to you going into the weekend.
That's good, John. I'm going to tear up here.
I know. It's a special friendship you and I have.
Yeah. Does Aston Villa any good? All I want to know is, can the Tots
under Stevie Gerrard, they're pretty decent, Tom.
I'm more interested in Tots Aston Villa.
What a weekend of sport. We've got the Australian Grand Prix. Looking forward to that. We've got the big game on Sunday, Liverpool-Man City. Formula One, that was, Tom. And we've got the Masters as well.
Is that where Qantas went? Did he go home to see the Australian Grand Prix?
That's where our Australian producer has gone, that you are still calling an Australian airliner.
Yeah.
I mean, TK,
and
really.
We were polite. We didn't ask Hatzi if he agrees with Dudley.
I'll do Brad's review this year, not you.
I think I did ask.
I'm pretty sure Lisa asked. Anyway.
Well, she was delicate.
Equity's up a tenth and all that. David Leverett to JP Morgan joining us a little bit later. You two are solo without me next week. Have fun. This is Bloomberg.
Really?
Keeping you up to date with news from around the world. With the first word, I'm Rishka Gupta. The war in Ukraine is entering a new phase 6 weeks after Russian President Vladimir Putin launched the invasion. Ukraine may have just weeks to acquire new weapons for fighting in the eastern part of the country. Russian forces are expected to regroup after being pushed out of the area around Kyiv. Meanwhile, dozens of refugees were killed today after Russians allegedly fired a missile at a train station in the Donetsk region. Global food prices are rising at the fastest pace ever. The war in Ukraine has choked off crop supplies, leading to panic about shortages of key staples. According to the United Nations, food prices rose some 13% last month. And in Costa Rica, a DHL cargo jet broke into two when it skidded off the runway after an emergency landing. The two pilots escaped without serious injuries. They had reported hydraulic problems with the Boeing 757 just moments after takeoff and returned to the airport. And Spirit Airlines has agreed to have talks with JetBlue over its $3.6 billion takeover bid. Spirit says the JetBlue offer could lead to a superior proposal. JetBlue's bid topped a $2.9 billion offer from rival discount airline Frontier, which Spirit accepted just 2 months ago. And Elon Musk will join Twitter CEO Parag Agrawal at a company all-hands meeting next week to address employee questions. The world's richest person disclosed Monday he had taken a 9.2% stake in Twitter. The next day, Twitter named Musk to its board. According to the Washington Post, the Q&A session is to ease employee concerns about the impact that Musk will have. Global News 24 hours a day on air and on Bloomberg Quick Take. I'm Ritika Gupta. This is Bloomberg.
City of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
At the Delhi airport, and behind me you can see SpiceJet's 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
We're in the middle of adjusting monetary policy from our very accommodative stance after COVID towards a neutral setting by the end of the year, probably certainly early next year, depending on what the pace will be.
Mr. Evans of Chicago, one of my favorite people in the practice of economics in a very unusual time. Next week, we will dive into further economic data, including inflation, one of the great themes here of an 8% number, and on to the Fed meeting. Of course, next week, the ECB meeting, which I'm sure Evans of Chicago will be paying full attention to. We digress now, and Lisa and I do this, Lisa Bramwitz and I do this, with Edward Ludlow, divorce therapist from the Kennedy Space Center at Cape Canaveral. There's going to be a launch at 11 a.m. We're going to launch private citizens up into, well, it's a 5-bedroom house, folks, and it's where the aggrieved go to one end of the house and the others are at the other end of the house. Ed, these astronauts today, these private citizens, are going to fly up to a Russian-U.S. spat. How ugly is it?
Correct. It's pretty ugly. I mean, I spoke to Kathy Leaders yesterday, Associate Administrator for NASA, who put a pretty brave face on it. But the reality is that because of the conflict in Ukraine, war in Ukraine, space tensions between Russia and the United States are not good. You have a situation where you're sending 4 private citizens up to the ISS, 3 of which paid $55 million a pop for a seat. And I asked Kathy Leaders essentially, well, will they go and visit the Russians? And she said, probably. They might have dinner, for example, at the Russian half. But how it stands currently is that the Russians cosmonauts, 3 of them on board the ISS, would have to extend an invitation to these 4 private citizens in order for that to happen, which is a strange state of intergalactic affairs, Tom.
One of the great niceties of our early NASA programs where we had military and then an odd duck named Neil Armstrong, are the people of Russia and U.S. astronauts on ISS, are they all military?
They're astronauts, and NASA has this very firm view that there's peace in space. And they mean that literally, that aboard ISS, whatever's happening here on Earth, that doesn't happen. I mean, the tension comes from here on Earth. Dmitry Rogozin, who's the head of Roscosmos, the Russian space agency, said on Saturday, for example, that the economic and trade sanctions on Russia are so bad that if the US does not ease them or withdraw them, then Russia will pull out of the ISS, an agreement that's been in place since the 1998 IGA. And behind NASA, Russia is the biggest financial contributor to ISS. NASA contributes about $4 billion of taxpayer money annually. Russia's not far behind. But the greater concern is if we did get an escalation, Russia could literally pull out of ISS. In other words, undock their modules from the station. And what's worrying about that is that one of the key Russian modules of ISS actually provides the propulsion, the thrusters that help ISS reorient to its 250-mile altitude above Earth. So it's serious, but as I said, NASA officials I speak to are putting on a pretty brave face.
Ed, how is this whole situation complicated by the fact that the astronauts being brought into space from the U.S. side are through SpaceX, a privately owned operation?
Yeah, you know, again, I've spoken to a few SpaceX officials while I've been here and NASA officials. It's an opportunity for SpaceX, right? They are the carrier of choice. They're the only carrier currently other than the Soyuz rocket from Russia that can reach the ISS and take human life. The bigger picture of this mission, Lisa, is that it costs NASA a lot to do this, right? To ferry astronauts from Earth to the ISS. And Axiom, which I would describe as the travel agent, right? If SpaceX is the airline, in the near term, Axiom is the travel agent that's arranged for these private citizens to go up. But from NASA's point of view, they've brokered this thing with the long-term goal of the private sector taking the cost burden away. So that in the future, future, they don't have to worry about this because it will be the private sector that not only provides the launch, as SpaceX is doing, but that also provides the actual space station in space and brokers the seats for those high net worth.
And some people are conflating space tourism with the privately funded attempt to put satellites and other aspects that are really key to surveillance and, frankly, modern technological advancement. How much are some of these privately operated missions really going toward the satellite aspect, the telecommunications aspect, and not just space tourism?
Right. Yeah, I love that question, Lisa. And by the way, on the screen and for our radio listeners, Launchpad 39A is the same pad that man first went to the moon. And the significance of this mission is the first all-private crew, first of all. So yes, the Russians have taken private citizens up, but they've been accompanied by Russian state astronauts, for example. The long-term ambition is to have laboratories in space that are run by the private sector, to make use of data generated in space by the private sector so that NASA doesn't have to put $4 billion a year into its low Earth orbit program, and it can use the money that it was putting into that program into going to Mars. And I know that Tom Keen's on set raising his eyebrows at that, but that is the vision, not just of Elon Musk and SpaceX, but NASA. They want to move resources away from satellites and from low Earth orbit, and they want to move it to human travel deeper into our galaxy.
You're getting me going, Ed Ludlow. Where do we stand on manned versus unmanned budgeting?
Well, there is a commitment from NASA for manned budgeting, right? The ISS is in commission until 2031, when it will literally be dropped into the ocean and decommissioned. And as part of this Axiom mission, Axiom isn't just in the short term taking people up to space. They're building their own private sector space station. But the thing is, there is a commitment from NASA. We have just had a new order to SpaceX for more crew missions beyond those that are scheduled for this year and more servicing of cargo missions to ISS. So it's a significant annual budget of taxpayer money.
Ed Ludlow, terrific brief. Thank you so much. Just incredibly up to speed. I can't tell you, folks, the authority that Mr. Ludlow brings to all of this space, this modern space effort. Lisa, what's great about the space station is they don't have to dump it into the sea. You can take it home, Lisa, and you can put the kids at one end of the space station and you in the other. And there's like 14 bathrooms and I think 6 bedrooms. The thing is large. I mean, you know, it's like, you know, it's like a George Clooney movie.
You know, honestly, and if they misbehave, you just press the booster and send them a little closer to Mars. It'd be fantastic. I think that would be really... with
a one-way ticket.
With a one-way ticket to get there in 9 months. I do think this is fascinating, especially given that it is the International Space Station and the questions about Russians' participation, especially after the cosmonauts issue over their uniforms and whether that was potentially a show of support for Ukraine. They came out and they said, it's just our university, but it highlights the public profile of some of these explorations, both in name as well as in substance.
I think Ed had a good window there into the managing of the message and the tensions that are out there. Lisa, what an extraordinary week, and it sets us up for the earnings of the man who writes a 44-page letter.
Yeah, from, of course, Jamie Dimon on Wednesday. I got to say, we keep talking about it, and John was really good about harping on the 10-year yield and how much that has risen now, 2.7%. We have crossed 2.7% right now, driven by inflation-adjusted yields. Basically, the Fed is seen as moving away, taking a more hawkish stance, looking to potentially a restrictive policy.
What am I looking at Sunday evening and the Monday Asia morning? Guess what it is? Dollar dynamics to see where yen is. Do we get out to a week yen 125? We'll know that on Sunday, as we will know the future of the Masters as well. Please stay with us. Much good conversation today on Bloomberg Radio.
Connection lost.
Television. Good morning.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Setting you up for a massive week ahead. From New York City this morning, good morning, good morning. Futures fading just a little bit on the S&P. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Live from New York City, we begin with the big issue, hoping for a soft landing.
This job of orchestrating a soft landing.
They're trying so hard to.
The Fed is late. The Fed knows it's late.
They need to normalize. They need to normalize as quickly as possible.
The Fed's path to this soft landing has narrowed.
The Fed now has to choose between one of two mistakes.
There's a risk that the Fed over-tightens. There's a risk that the Fed under-tightens.
Go too fast or go too slow.
What's worse, an under-tightening this year or an over-tightening?
It seems unlikely that we're going to be able to avoid a harder landing.
Now we're going to make a policy error trying to fix the problem that they should have tried fixing last year.
The question is sort of when.
Path to manage landing inflation without breaking growth is getting narrower and narrower.
The big question is, does it morph into a recession?
So it's certainly not an easy position for the Fed.
Joining us now, Crossmark's Victoria Fernandez, Invesco's Rob Waldner. Victoria, let me begin with you. We're pricing in some weakness into this equity market beneath the surface, away from the index level, sector to sector. How elusive is that soft landing going to be?
Yeah, I think it's going to be pretty tricky, Jonathan. I mean, it is this tight wire that they're going to have to be walking for this. And, you know, Jan Hatzius was on earlier on the network, and he was talking about a way to make this happen is that they have to diminish the demand and diminish the capex from corporations, but yet not enough to where people are, companies are laying people off. I'm not sure how you actually get exactly that point, because you look at PMIs and capex is actually above trend levels right now. That's actually a support for the economy. So I think it's going to be very difficult for the Fed to focus on just inflation. That's where their focus is right now, and continue to raise rates at an increased pace. I mean, I didn't think they could get more hawkish than they were earlier in the year, but they proved me wrong and have done so lately. How they're going to accomplish that without destroying other parts of the economy. I don't see a recession in the U.S. this year, but I definitely see much slower growth.
Rob Waldner, your thoughts, sir?
Yeah, I think the Fed is on a pretty good path here. I mean, this is tricky, but the Fed has been very clear. They need to get rates to neutral, and I think they're right in that assessment. And so they're going to do that as fast as possible. And we've now got that priced into the market. A lot of people were concerned the market would not be able to handle that. They would create a lot of volatility, but we've got the, what is essentially 350s and 325s priced in over the next 6 meetings this year. And the market's stable. And I think we're starting to see some signs that, job openings have stabilized. There's some signs that what we expect might happen is that the economy will slow from the very high rates of growth last year, steadily slow down here. And, if the economy can get to sort of potential like rates of growth with, 1 or 2% handle by the end of this year or beginning of next year, they may be able to handle that.
Rob, I hear this a lot, this idea that we've priced in the Fed. We might have priced in a rate hiking cycle 3% perhaps. How do you price in QT if people don't know how to price QT?
Well, that's a great point, Jonathan. And I think there is some more, QT, the big hawkish surprise that we might get in QT, right? Because we don't really know how this is going to work. But the big hawkish surprise could be if they start to sell assets. And we think they may sell some mortgages. They may decide to sell some treasuries. So that will put upward pressure on the longer end of the yield curve. But, I don't think the Fed would be averse to having the yield curve stay steep while they raise rates. I think that they would feel like that is supportive of their mission.
Look at what's been happening this week, though. We've had that steepness in this yield curve. Yields have picked up a bit, materially so, on a 10-year, through 270. And Victoria, what's happened? The banks haven't rallied, they've sold off. The semis have struggled. A lot of people have talked to me about that. The transports, that's in vogue, always comes up whenever they start to show some weakness. We've seen that too. The home builders through the whole year. I look ahead to the year ahead, the forward look, Victoria. You can take the recession out if you don't want to go that far, but the growth outlook, this equity market's telling us something, isn't it?
Well, it is to an extent, and it's telling you that you're in the later part of this cycle. But at the same time, Jonathan, we look at the credit market, and the credit market is really kind of telling you a different story. We had widening in the credit market earlier in March, but look over the last couple of weeks. There's been tremendous tightening coming back, both in investment grade and in high yield. And you look at the leverage in investment grade, and that's about half of where it was 2 years ago. So I think you have some conflicting stories. I think you have the component that's saying, yes, the economy is strong, the consumer is good. There's a T-shirt that says, underestimate me, that'll be fun. I feel like that's what the consumer is saying right now. So don't underestimate the strength of the consumer. You have earnings that are coming up. I think we're going to get pretty decent earnings here for the first quarter, but yet these valuation levels and the idea that we're at the late cycle is really kind of balancing against that. But I think you have two different stories coming when you look at part of the bond market and at the equity market.
And that's why next week is so important. We get CPI on the Tuesday, on the 13th. Then on the 14th, bank earnings kick off. And then on the Thursday, we get an ECB rate decision on the banks with JP Morgan on deck next Wednesday. Let's bring in Kaylee Lyons for more. Hey, Kaylee.
Hey, John. Well, we're just days away, gearing up for another earnings season. And actually, the closer we get to JP Morgan kicking things off on Wednesday, the higher estimates largely have become when you look for the S&P 500 as a whole. Back on February 25th, you had the average analyst forecast for S&P 500 earnings at just 4.9% growth. That number now up at 5.7%, even though it is fractionally lower from where we were at the end of March. And that isn't just a pattern that holds for the first quarter. Forecasts for S&P 500 earnings growth have risen for all 4 quarters of this year. Full year expectations higher since January 1st, and that doesn't often happen at the start of the year. Over the last 10 years, estimates for the complete 12 months have fallen 7 times by this point in the year. And our John Authors points out that the 2 years before this one that saw that happen could arguably be contributed to unusual circumstances like the swift recovery from the pandemic last year and the impact of Trump's tax reform back in 2018. So that makes this also a little bit unusual, especially that companies are facing headwinds from inflation, supply side challenges that the war in Ukraine only threatens to exacerbate, and all of that could add up to some serious pressure on margins. So the question once again will come down to companies' abilities to exercise that pricing power. So far, largely, they have been able to do so, which is why we actually saw earnings last quarter coming in ahead of expectations. But the share of companies that beat was actually the lowest since the onset of the pandemic. So we'll see what upside surprises are able to look like this quarter, John.
Katie, thank you. As we look ahead to earnings next week, one thing we know is that Goldman traders have made a lot of money. Goldman traders made $300 million on inflation bets in the first quarter with a strong lead to what's been developing over in Europe. We'll look out for that and break that down with Shanali Basak a little bit later around the opening bell. On the year so far, Goldman struggled. It's down 18% year to date. JP Morgan is down 17% year to date. If we can bring up a bonds board just pretty quickly, let's think about this. Where we've been year to date on treasuries. On a 2-year, we started the year in and around 70 basis points. Look at this, 250, 218. If I told you the amount of work we do at the front end of the yield curve, pricing in a big rate hiking cycle, and then told you we'd have this weakness in banks, would you believe me? KBW Banks Index is down day after day after day after day. Victoria Fernandez, can I get your thoughts on this? Your response to the weakness we're seeing in the financials?
Yeah, it's interesting that we're seeing that when we have the actual steepening of the curve from 2 to 10s. You know, everyone thought the weakness, a lot of it was due to the inversion between 2 and 10s last week. But look, banks have changed a little bit. We actually still like the financials right here. Bank of America is actually a name that we've been purchasing lately because the business model has shifted. When you look at the loans that banks have, back in 2010, about 60% of those loans were real estate, and they were targeted to that longer end of the curve. They're not anymore. That real estate component's down in the 30 percentage points, and they're more focused on commercial and industrial loans, credit cards, autos. That's on the shorter part of the curve. So as the Fed hikes rates, net interest margins can actually go higher for banks. And I think people need to shift a little bit from the historical way that they thought about the relationship between banks and yield curves and think more short end. That doesn't explain why banks are still doing poorly. I think they've gone oversold a little bit here, so you have an opportunity, but it's probably more of a short-term trade at this point of the cycle than a longer-term trade.
We'll see how everyone responds to the numbers next week. I was just going through the Bank of America research this morning, and what it said to me was just a lack of conviction. I spoke to someone recently who I really respect in a market, and they said that's what we've got right now, minimal conviction. They went through the client feedback they'd had, quote by quote, and here's some of the quotes. I'll share them with you. Bill Dudley in everyone's mind right now. No one wants to get cocky ahead of 50 basis point hikes in QT. Can't make my mind up if it's recession or stagflation. Someone else said recession now is so consensus. Rob, can you respond to this? Just the lack of conviction and the conversations you're having in markets too. Is it a reflection of the same thing?
Well, I think that the key thing here, Jonathan, is that we're in a late cycle kind of dynamic. And what's confusing about it is that the Fed is late. So the Fed is starting to get going late in the cycle. We talk a lot about that, but that does have impacts on markets. So that late cycle dynamic where growth is slowing and financial conditions are tightening, that's not good for asset markets overall. So the underlying growth is still decent, but you know there are headwinds because growth is slowing and policy is tightening. And the thing that's confusing about it this time is the Fed is late. So it's starting to raise rates much later in the cycle. So we're getting confused between the Fed and the cycle dynamics.
Futures right now, negative 0.1%, about 20 minutes out from the opening bell. Rob Waldner, Victoria Fernandez sticking with us. Let's get you some movers ahead of that open. Here's Abby.
Good morning, John. And yes, futures are flipping around a little bit, trying to find some direction, but down slightly. However, helping to the upside, Kroger shares are popping. This on an upgrade of Bank of America to a buy. The analysts there saying consumers are accepting and paying higher prices at the market. This is the UN Food Index of prices rise to a fresh record high for the month of March, of course, as the war in Ukraine takes a toll. Also higher off of its highs, but still higher. JP Morgan Chase, speaking of bank earnings, up 0.3% in sympathy with yields up a little bit this morning, and of course ahead of earnings next Wednesday. Robinhood to the downside, though, down 5.6%. Goldman has downgraded the shares definitively to a sell. And then Twitter on the week, one of the best weeks in a while, up 22%, up for a fourth week, of course, on the Elon Musk effect and his 9.2% passive stake. Not so passive with that new board seat. And next week, John, get this, he will be meeting with the Twitter staff along with the CEO to address any concerns around culture and change as he becomes this part of the company, even whether it's passive or active. I would say more active.
Do you think that meeting might be a reflection of something he suggested earlier this week on Twitter, perhaps? Imagine it going that way.
I'm not sure what...
No, you didn't see that?
Oh, in terms of the Rogan podcast. Yes, well, that would be a concern for some people.
I don't imagine that's going to be how they carry out that board meeting.
Probably not. I would imagine it'll be more straightforward and professional.
Abby, thank you. We'll try and stay professional. Coming up on the program, Western allies ramping up the pressure on Russia.
Allies should do more and are ready to do more to provide more equipment, and they realize and recognize the urgency.
That conversation up next.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
It was a clear message from the meeting today that allies should do more and are ready to do more to provide more equipment, and they realize and recognize the urgency. Be prepared for a long haul. This war may last for weeks, but also months, and possibly also for years.
The EU issuing a fifth round of Russian sanctions, a first step in targeting Moscow's vast energy revenues, including a ban on Russian coal imports and restricting Russian trucks and ships from entering the EU. I want to get over to Anne-Marie Hordern down in DC. AMH, let's start there. The breakthrough this week, how much of a breakthrough is this?
Well, it is a breakthrough because it's cracking that ceiling of energy, which, Jonathan, for a while, really, you couldn't even get a European official to want to discuss any part of the energy spectrum with you about if they would ever go after it. But obviously, coal is a lot less important than the likes of oil, natural gas. But the Polish ambassador says the EU is going to be drafting up plans to target that next. Go after oil, go after natural gas, and also nuclear fuel coming from Russia. The issue is going to be, can you get every single European Union member to join on board with that? That is going to be tough.
Are we satisfied with the results? And by we, I mean European allies and the US administration. Are they satisfied with the results of what they're seeing so far based on the sanctions they've implemented?
Well, I think the fact that they are starting to now dig into the energy portfolio says a lot. And I think the United States recognizes, though, the position Europe is in. Europe cannot tomorrow, overnight, turn off the taps from Russia. It is just not possible unless they want to have demand destruction and tell individuals in Europe, you can no longer drive, you have to shut off your heat, etc. I would also notice, Jonathan, this morning when I came in, a massive policy shift coming out of Tokyo. The Prime Minister of Japan is saying we will also ban Russian coal. Now, they drew a very hard line saying we can never go into banning any imports from Russia because Japan is so reliant on imports of all energy spaces. And now they are even saying that they want to work in lockstep with the United States and the European Union.
Just to pick up on a market move just quickly, dollar index DXY with a 100 handle. It's been a while. DXY with a 100 handle. We take the broader Bloomberg dollar index, and that is at the strongest level going back to July 2020. The DXY, the dollar index, more heavily weighted, of course, towards the single currency. But there it is, a 100 on the dollar index. MH, just to come back to you just quickly, the objectives of this war for the Russians, to demilitarize the country, one, to change the leadership, two. They were the top two objectives for the Russian government. Have they changed now?
Well, we should note that those top two objectives, the Russians actually made Ukrainians more obsessed with President Zelensky. There's a really nationalistic feel in Ukraine. And at the second time, now you have more weapons than ever before from Ukrainian allies filtering into Ukraine. The objective now, Jonathan, has clearly changed to what we're hearing on the ground and officials have made pretty public, and also what you can see is that Russia is going to now target eastern and southern Ukraine. They were not able to capture Kiev, so now they're going to try to make that stronghold in the east. And what we have today is Ukrainian officials talking about in these images of bombing of a train station as hundreds and thousands potentially were trying to evacuate the Donetsk area because they know that that's where Russia is going to be targeting.
AMH, thank you. Down in DC, just to return to the price action just briefly. Yields higher again at the front end. Stateside on a 2-year Treasury yield, 252. Broke through 270 on a 10-year this morning, up another 6 basis points. So let's call it 272. Off the back of this, a stronger dollar in the mix. The broader weighted Bloomberg Dollar Index, the strongest since the summer of 2020. Got to go back to spring 2020, May 2020 to be precise, to see the dollar index where it is right now, the DXY to be specific, with a 100 handle. I'll touch on that a little bit later. To return to energy, those stocks absolutely ripping this year. Year to date up by almost 40%. Should you stick with it? This is the view from B of A.
Stick with energy. I know it sounds crazy. Energy is still a massive underweight, but the sector has basically doubled in its size in the benchmark. Still offers very high free cash flow, real free cash flow relative to other sectors. The earnings have kept up with its price moves. I think energy is now finally investable again, but folks haven't necessarily moved into the sector as aggressively as we would have expected.
Victoria, those names have absolutely ripped. Would you stick with them?
You know, we were actually underweight energy for most of last year, Jonathan, which did not work out well for us. And we actually wish we had more in our portfolio so we could be trimming some of those names. But we are adding a little bit just to bring that weight up. Savita talked about how the energy component has doubled in the index. So we need to bring up our weight a little bit. So as we look at some of those names, Phillips 66 is a name that we've been purchasing lately. And I think we have to be watching very carefully. I know they think that we'll have demand destruction when it comes to energy because of higher gas prices, and then that's going to flow through to stock prices. But if we are releasing reserves and bringing gas prices down, we really don't see how that's going to make demand go lower. We think we're going to continue to see demand. So it makes sense to us that you have some exposure to energy as we go through the next few quarters, especially if the Russia-Ukraine war continues longer than what people are anticipating. The pressure is going to remain.
Victoria, the pressure's coming from Washington, D.C. as well. I just wonder how you think they're going to respond in Q1, in earnings season, how they're going to deliver their outlook, reflect on the earnings they've had, when you know the earnings they have. That is going to be a very delicate story in Washington.
It really is, and we already had Shell come out and talk about the write-off that they're going to have. I think they're saying $5 billion, if I remember the number correctly, that they mentioned, and they're not going to be the only ones, right? I think these companies are going to come out during earnings season and remind us of the struggles that they had previously. I think there's going to be a debate around, do they put in the CapEx? Do they put in the time and the effort and hire the people to drill more if things are going to pull back, if demand is going to slow down? There's going to be a big story coming out of the energy companies during earnings, and it's going to be very important to watch.
I imagine they'll compare Q1 2022 to Q1 2020 to just help us understand where they've been and where they were a few years ago. Rob Waldner, at some point, people believe that the things that are helping these names hurt these names. Energy prices specifically start to hit the cycle. Are you one of those that worries about that?
Well, I think you would need to see higher prices than where we are now. I mean, if you go back and look at where you really get demand destruction, it's not at $100 a barrel. It's well above that. And so if you just continue to see what we're seeing, which is these higher prices, you know, we think that the energy sector is probably underpriced for where energy currently is, and particularly if you can get up the back months and really start to get capital flowing to this sector, which has really been capital has steered well away from the sector for quite a while. You know, you should be able to get continued good performance there.
Final word on high yield, Rob. Do you like what you see? Have you had a backup in yields that you'd like to buy? Is it sufficient enough?
Yeah, so, you know, high yields are back up close about 6% or a little bit above 6%. And if you accept kind of what we think, which is the Fed will raise rates, but you know, they'll get somewhere around 3% by the middle of next year, and the economy is still decent, even if we're in late cycle, the economy still has decent growth. The fundamentals behind high yield should remain solid. So, you know, it starts to look interesting at 6%.
Rob Waldner, Victoria Fernandez, to both of you, thank you. Going into the opening bow this morning. Coming up on the programme, the morning calls and later, higher rates doing very little for the big banks. What is going on here just ahead of earnings season with the banks on the longest losing streak since 2018 on the KBW Banks Index? More on that still to come from New York, with futures down 0.1% on the S&P. This is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Minutes away from the opening bell in New York this morning. Good morning to you all. We are slightly negative on the S&P, down again on the Nasdaq, and down on the week as well, pretty hard on the Nasdaq 100. We're down 0.4%, up pretty hard on a 10-year yield this week. Check out this in the bond market. A 10-year Treasury this week up by more than 30 basis points to be precise, up right now to 271.52. And even with that, the banks aren't performing. The curve's steeper this week. It's not flatter. I'll pick up on that in a moment. That's the price action. Here are your morning calls. First up, Credit Suisse downgrading Alcoa to neutral, expecting inflationary pressures to continue with aluminum prices peaking. Next up, B of A downgrading 9 different stocks within their transportation coverage, pointing to softer demand and rapidly falling freight prices. And finally, Gordon Haskett upgrading Target to buy, saying sentiment on the retailers looks too negative, with channel checks showing signs of strength. Coming up, surging bond yields not enough to support the big banks. 7 days of losses on the KBW Banks Index, the longest losing streak going back to late 2018. Up next on this, JP Morgan's David Leibovitz on the earnings season right around the corner.
SpiceJet 737 MAX aircraft. Earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
24 seconds away from the opening bow this morning, and good morning. Closing out this week and looking ahead to next week already, with earnings season just around the corner. CPI next week, the estimate so far in our survey, 8.4% is the median estimate. Going into the opening bow, futures just a little bit negative on the S&P, down a little more than 1/10%. There's the opening bow, switch at the board and get to the bond market. What a move we've seen on a 10-year yield, up by more than 30 basis points on a 10-year this week to 171. Yields high this morning by another 5 basis points. The dollar showing some strength. The dollar index climbing to a 100 handle on the DXY. Euro dollar negative 1/3%, just about hanging on to 108 going into the first round of the French election this Sunday. Euro dollar 108.41. Brent crude positive. WTI just about by 1/3%, 96.38. But just about clinging on to 96 right now as well. Looking at the open about 30 seconds in, we advance on energy stocks by 5 or 0.6%. Information technology a little softer, lighter, lower, negative 0.6%. That's where your underperformance is on the session this Friday so far. Let's get you some movers. Here's Abby.
John, let's take a look at some of the outperformance, starting out with the shares of Kroger. They are popping on an upgrade to buy at B of A. The analysts there are saying that consumers are accepting and digesting higher prices at the market, paying those prices. This as a UN food index of prices has risen to a fresh record high, and that's one reason that Archer Daniels Midland is also higher, up 1%, plus grains themselves higher. Spirit Airlines up about 0.7% as the company agrees to entertain takeover talks from JetBlue and its unsolicited $3.6 billion bid. And then finally, this is interesting, CrowdStrike, the cyber defense company, popping as a new Department of Defense contract has been accepted, and the company has boosted guidance. It, of course, is a technology company to some degree, John. One tech company not being pressed by these rising yields.
Abby, thank you. About a minute in, breaking news. The banks, drum roll, they're positive, just by 1/3% on the KBW Banks Index. Before today, 7 straight days of losses, the longest daily losing streak going back all the way to Q4 2018. Do you remember that? The back end of 2018 is when the Fed had to back away in a massive way. Goldman this morning still negative by 0.2%. JP Morgan positive, though, by 1/3% going into earnings season next week. Let's get to Bloomberg, Shonali Basak for more. Hey, Shonali.
Hey, John, really, there's a lot of red on the screen when you look at the big banks. All of the big five are down more than 10% on the year, some more than others. You have Goldman Sachs, JP Morgan down 17% on the year. And it's easy to see why when you look at Wall Street's expectations of what the quarter will look like. So you have trading performance that's expected to be down across the big banks, especially in FICC trading. If you take a look at the screen, there are JP Morgan FICC expectations down 20%.
10%. Goldman expectations down 21%. You have to wonder how much that will be true because there are some very interesting gains in those businesses. If you take a look at Bloomberg Scoop today on the inflation bet for Goldman, $300 million in the first quarter alone. If you take a look at the nickel trade they made, there's going to be a lot of questions around whether they will have been able to make money on that as well. And Citigroup also, big commodities exposure, questions around whether they were able to kind of keep steady. Deal making also, take a look, John, on how much lower expectations are. What my sources are telling me is that people are prolonging deal making. So September is around the time people expect some of those deals to come back. So even in a bit of bad quarter, you're going to hear those bankers keeping that positive outlook later on in the year.
You are always my go-to correspondent whenever it's earnings season for the banks. Next week will be no different, Sonali. You listen to the calls. On the calls last time around, one dominant focus was spending and what you'd get in return for that spending. This time around, Tom Keene this morning on Bloomberg Surveillance mentioned something interesting. He wondered whether this was going to be about discipline and cost discipline, because the story over the last 3 months has become much, much more about inflation and cost inflation.
Yeah, listen, pay for performance. That's what they've said all along. We knew that they had levers to pull here when it came to pay, at least according to their talent bases here. When we talked to Tom DiNapoli, the comptroller of New York, he already expected that pay would be lower for the bankers this year as opposed to last year. But remember, there are some costs you cannot change here. There's also, John, I just want to mention really quickly the loan picture here. The loans have been growing much more than expected, so that could be a positive sign. You'll hear from analysts, however, on what the credit underwriting looks like and whether we're going to start people preparing a little bit more for a potential recession next year and worry about write-downs in the future.
Sonali, awesome. Looking ahead to next week. Looking forward to it. JP Morgan coming out later next week, April 13th to be precise. Looking ahead to earnings season, Binky Chandler at Deutsche Bank said this: the consensus expects earnings growth in Q1 to decelerate sharply on a year-over-year basis and to fall slightly on a sequential basis adjusted for seasonality. However, a variety of drivers point to continued solid sequential earnings growth in Q1, and we look for slightly above average beats on the earnings season and a whole lot more. I'm pleased to say that joining us now is JP Morgan's David Leibovitz. David, let's start there on earnings. Do you agree with the Deutsche view, the more optimistic, constructive view about the outlook for earnings?
I do think that that's right. You know, at the end of the day, when we think about the outlook for corporate profits, it's much more about the nominal growth story than it is about the real growth story. And we know that economic activity on a real basis was a bit sluggish during the first quarter, but inflation is obviously quite elevated. And so you're seeing that companies have pricing power, which is something that didn't exist in the aftermath of the financial crisis. And so I do think that there's upside risk around current estimates. You know, to me, the question about the full year is really going to hinge on margins, and you were kind of flirting with the topic in the context of the financials. Some input costs can be passed along very easily. Others, like wages, it's more difficult to do that. And so I really think that, again, the margin story is going to be the key determinant of the way that earnings shake out for 2022 as a whole.
How are you thinking about the FX story too? And forgive me for bringing that up prematurely in this conversation, but just a series of headlines dropping again, David. In the meantime, we've got a low on the session on cable of 129.99, so it's a break of 130 for the first time in quite a while on pound sterling, the first time since November 2020. Earlier on this morning, about 15 minutes ago, we had the dollar index with a 100 handle, the Bloomberg dollar index the strongest since summer of 2 years ago as well. How does that influence your thoughts about where you position in the equity market globally?
So the dollar story has been interesting here because usually if you look at the way the dollar behaves going into periods of Fed tightening, it's very much an example of buying the rumor and selling the news. Usually you see the dollar strengthen going into the first rate hike and then sell off in the aftermath. Obviously, that's not the way things are playing out this time around. I think the general risk-off tone in markets is contributing to some of this dollar strength in addition to widening interest rate differentials. But, you know, in general, we think that the dollar is too expensive. I think that the dollar is taking its cues from two things, you know, expectations for global growth this year and what's going on with the pandemic. And you look at what's going on in China, you look at what's going on in Europe and the risk of higher energy prices there, and it makes sense that the dollar is strengthening. And so it does make us a little bit more cautious about those big global names. But again, I think that this is probably temporary and wouldn't be surprised to see the dollar begin to weaken during the second half, particularly if we're able to move past some of the current headwinds.
And that's because you've got a much more constructive view about the cycle. I get it. If you've got that, you'd fade this dollar move. But this is happening in the equity market too, David. I was talking to two guests earlier this morning, Victoria Fernandez and Rob Waldner. Within the equity market, as you can see, yields are higher. Banks aren't responding to it. Home builders are suffering because interest rates are high, but also because some people are worried about this cycle rolling over. You see it in the transports as well with the downgrade we had from Bank of America earlier this morning. And I'm wondering how you're suggesting to clients how to manage cyclicality at the moment, David. What are you telling them?
Absolutely. So, I think if we go back to the beginning of this year, the biggest risk on our radar was that the Fed was going to overdo it and end up ending the expansion at some point in 2023. A quarter of a way through the year, the biggest risk on our radar is still that the Fed overdoes it and causes a recession next year. What we've been saying to clients about managing that cyclicality, when we look at portfolios, one of the things that we've noticed is that over the past couple of years, clients have become very, very overweight growth, and as a result of that, underweight value. And so a lot of the conversations aren't about going crazy and leaning into cyclicals in an aggressive way, but rather bringing those portfolios back to balance. And what I would say is that even within the cyclicals, right, our outlook for parts of the industrial complex, for parts of the material complex, very different than the outlook for things like financials, which are obviously struggling both from a trading as well as a fundamental perspective. And so when it comes to having enough cyclicality in portfolios, that's really to us what's most important. We're not saying that people should overdo it, but rather ensure that they have enough exposure that they can participate if consensus ends up being wrong about where the economy is headed.
Well, I'm wondering what consensus is, and is it sufficient to avoid a recession? Is that sufficient for cyclicals to start doing something for me again? And David, that depends on what you think we're pricing here. Are we pricing a recession, or are we just pricing a slowdown? Which one do you think it is?
So I think that the equity market is still just pricing a slowdown. I think that what, to me, the most important thing to watch is what happens at these next couple of Fed meetings. Because at the end of the day, all of the volatility that we're seeing across capital markets comes back to one central issue, and that's uncertainty about what the Fed is going to do. That's driven interest rate volatility higher, that's driven FX, equity, so on and so forth, volatility higher across the board. And so to me, markets are still pricing in a slowdown today. But if we begin to see the Fed get uncomfortable, that's where I think recession risk then starts to get priced in a little bit more aggressively. Again, if the Fed looks like they're willing to sacrifice the expansion for the sake of getting the inflation genie back into the bottle, that's when we're going to take a more risk-off tone in portfolios.
David, I wonder if this is a lose-lose situation. And I know some people are gripped by that at the moment. In the previous cycle, in that bull market, this Federal Reserve stepped in when growth got weaker, and they could do that because inflation was low. And when growth got better, they didn't have to do as much, and that supported earnings. This time around, there's a belief that if things get worse, then things are bad. And if things get better, then the Fed needs to do more. And that's what Jan Hatzius of Goldman said this morning. If growth doesn't decelerate, if it does not decelerate later this year in the way that Goldman anticipates, they're talking up a Fed funds rate of north of 4%. And I'll go back to a Bank of America research piece this morning and the client feedback they got. And this one line that stuck out in client feedback, Bill Dudley in everyone's mind right now. Bill Dudley, the former New York Fed president, this week wrote an op-ed on Bloomberg Opinion, David, and he suggested this Fed needed to get equities down. That was the objective. They need to get stocks down. And David, if that's the objective, is this a lose-lose situation for the equity investor?
So I think that if the objective is to get stocks down, then yes, inherently it's a lose-lose for the equity investor. But, I think that there's something very important to recognize here. And it does feel like we're in an environment of peak hawkishness. The Fed is going to respond to the data as it comes through the door. And, when we take a step back and think about what the Fed is trying to do here, their job is almost impossible because all of this inflation is coming from the supply side. Hiking interest rates doesn't fix the supply chain. And so, the Fed, to quote a very famous band, needs a little bit of help from its friends, right? It needs the private sector to engage here a little bit more, the private sector to begin to heal. If the private sector can get better and the Fed is raising rates, to me, that's how you end up with the ever elusive soft landing. But if you don't see things begin to heal from a supply side perspective, then it's going to be very challenging for the Fed to thread this needle. And so, again, we're watching what goes on the private side to really gauge how the Fed is going to respond and the potential for this cycle to either extend or end at some point in 2023.
David, thank you. It's that binary at the moment, isn't it? David Leibovitz, thank you very much. Your equity market's down and down hard at the moment. The Nasdaq off by 1 full percentage point. The S&P still doing okay, negative 0.4%. Can we bring up the bonds board again and just look at 2s, 10s and 30s? This move in 10s this week, through 270, up another 5 basis points, up around 30 on the week. We started this week talking about curve invasion. You've got some steepness again, about 19 basis points or so. 2s out to 10s. And we've been talking about that, haven't we? Yields are up, the curve is steeper, banks have done nothing for us the whole of this week. What does that tell you going into earnings season next week? Coming up, DC grappling with a fresh wave of COVID cases.
COVID is not over, and we have an obligation to protect our country, the American people, and make sure we're taking steps to prepare.
That conversation up next.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It's almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada, 1-2 itu ada. Tapi nggak kayak dulu, kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu. 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 itu nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
We know BA2 is here. We know that it is more transmissible. We know that it is leading to increased cases, and we know we're already seeing an impact on our resources. COVID is not over, and we have an obligation to protect our country, the American people, and make sure we're taking steps to prepare.
Speaker Pelosi testing positive after spending time with President Biden. The White House statement reading as follows, quote, "The president is not considered a close contact of Speaker Pelosi as defined by the CDC. The president saw Speaker Pelosi at White House events and had brief interactions over the course of the last 2 days." Anne-Marie joins us down in DC. Anne-Marie, can you help us understand this? I mean, we've seen the pictures. She spent time with the president. There was a kiss on the cheek and not a close contact. What is the CDC guidance? And the reason I ask this, and I think it's important, we're all going through this again. Corporations around the country are getting cases after cases after cases. They're all spiking. We all know someone that's got COVID again. How are we meant to manage this?
Well, it's a good question, Jonathan, because now everyone is vaccinated, boosted. The White House saying the president is double boosted. He got his second booster last week. So they view this as a very different scenario than, say, where we were last year and the prior year, obviously. But Speaker Pelosi was at the White House twice this week. We saw the kiss on the cheek. They embraced. What the White House is saying, though, is because he didn't spend a cumulative 15 minutes within 6 feet of the speaker over 24 hours. Now, I think there are some who would view the CDC guidelines a little bit differently, but the White House says it is technically not a close contact. But obviously, this is something that is concerning because it's not just Speaker Pelosi either, Jonathan. It's really ripping through Washington, D.C. right now. A number of lawmakers and also cabinet members are infected.
Looking at the situation with Speaker Pelosi, the other issue as well, Anne-Marie, is that she did have a scheduled trip, a congressional mission over to Asia, and there was a lot of reporting about perhaps going to Taiwan. The foreign minister of China had this to say, and let's just say they didn't hold back. If the Speaker of the U.S. House of Representatives knowingly commits a sneaky visit to Taiwan, it will be a malicious provocation to China's sovereignty, gross interference in its internal affairs, and an extremely dangerous political signal to the outside world. What's happening here?
Well, this is based off foreign news reports, right? We do know that she had this trip planned to Asia, and obviously now that the Speaker Pelosi does have COVID, that trip is going to be canceled or potentially postponed. So she was leading this congressional delegation abroad, and what the foreign news reports were that she was going to Taiwan. Now, her office was not able to confirm that with us. So it's interesting that the Chinese Foreign Ministry used the word sneaky trip. But China would view this, as the foreign minister said, as a provocation, because this would be an individual that's in line also to the presidency, very close to the president, Speaker of the House, same party as the sitting president, making a trip to Taiwan, which China views as the U.S. going against the one China policy.
I'm going to get to Mike McKee and bring him into the conversation as well. Anne-Marie, thank you so much for that. Mike, let's talk about how some of these stories start to link together. COVID cases, China, the situation in Shanghai, what this all means for the growth outlook and how hard that's been hit, Mike, in the last few weeks.
It's been hit pretty hard. We're looking at surveys from the Bloomberg Survey of Economists show inflation rising even more significantly by the end of the year. And that's just pushing people to push the Fed to do more, which then has a spillover impact on the rest of the world. And a lot of this coming from still COVID and the supply chain problems coming out of China.
Mike, the other issue we need to talk about is this Friday. Going into the weekend, on Sunday, we've got another election. It's round one of the French election. Can you help me understand just exactly what's going on here?
Well, let's set the table here. Monsieur le Président is in trouble. Macron is only 3.5 percentage points ahead of his chief rival, Marine Le Pen. There are a lot of candidates, as you can tell, but those two are considered all but sure bets to make it to a runoff rematch of the last election. And their polls show Macron only has a 5.5 percentage point lead. So there is growing fear that he might lose. He entered the race late. He spent a lot of time mediating between Russia and Ukraine, and it turns out the voters did not care. Actually, what the voters are saying, as they say in the United States and everywhere, c'est l'économie stupide. It's the economy, stupid. Inflation in France at the highest since the Eurozone was formed. Le Pen touring towns and villages saying that Macron is out of touch. He's not the president of everyone. He's the president of the rich, and she's defending the little ones. She's pledging to slash gasoline prices and tax big energy companies. This is not going over well in markets. The CAC 40 struggling. The spread between French oats and German bunds has widened significantly. So we will see what happens on Sunday. The concern is Le Pen, of course, she's a far-right nativist, would put at risk the economic reforms that Macron has tried to put in place and splinter European unity over a whole lot of issues, especially Ukraine.
Mike McKee, thank you, buddy. As always, do you want to do that again for us just one more time?
L'économie.
That was beautiful. Yeah. That's going to work. We should put that in the promo for Sunday's coverage. Looking forward to Sunday's coverage with Francine Lacroix. She'll take you through that later on this weekend. Looking forward to this weekend too. The Masters, Man City, Liverpool, the Australian Grand Prix, Mike McKee, there's a lot of sport coming up. I'm excited about it. Let's get you some sector price action. Here's Abby.
Hey, John. Well, I do know a little bit of French, but I certainly cannot compete with Mike McKee on that. Maybe next Friday, sectors in French. But right now, we do have more sectors higher, interestingly, with the S&P 500 down by about 0.5%. Energy leading the way, up with oil up just a little bit. Financials finally getting a boost with yields higher. To the downside, though, that is where the big weakness is in those mega weight tech sectors, communication services, discretionary tech. They are weighing, and therefore you have the S&P 500 down on the day and down on the week. And this is an interesting one, John, and it's not going to be surprising to you based on your conversations all week. But the worst four sectors, or among the worst four sectors for the S&P 500, communication services, despite Twitter's big rally, discretionary and tech, but you have the banks right in there. So it's an interesting mix for sure.
Picking up today, at least, the financials up 0.4. And Abby, thank you for that. Looking ahead to next week with bank earnings season just around the corner. Looking ahead to the European elections, the French election to be precise, and what that means for the euro, given what's happening with the dollar this morning. Looking forward to Guy Johnson's coverage. That will kick off in about 7 minutes' time on Bloomberg TV. Up next, we'll bring you the trading diary, looking ahead to the road into the weekend and coming out the other side into next week with 3 big events on the horizon. This is Bloomberg.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
"26 minutes into the session, this equity market's trading lower by 0.5% on the S&P. On the Nasdaq, down by 1.4, with yields kicking higher in a big way once again. And looking ahead to a big week ahead. That's the price action. Here's your trading diary. Some data at the top of the hour. Wholesale inventories. Then looking to next week. Fed speak. Bostic, Bowman, Waller, Evans, all on Monday. CPI Tuesday. JP Morgan earnings on Wednesday. Wells Fargo and Morgan Stanley on Thursday, followed by an ECB rate decision and initial jobless claims as well. From New York City, thank you for choosing Bloomberg TV. This was the countdown to the open. I'll be off next week if I catch you later on Bloomberg Real Yield. Looking forward to it. Otherwise, enjoy your weekend. From New York, this is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management. But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened back then in the 1990s. My name is Jeff Maish. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Businessweek about Pepsi's Number Fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands. And it's also a country that's very heavily influenced by America. American culture is everywhere you look in the Philippines. They're obsessed with Frank Sinatra music, for example. They love all things America, and that extends to their love for soft drinks, Pepsi Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
Look for the winning number in Sari Sari stores every day, also on TV, radio, and newspapers. You could be a millionaire.
$1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imaginations. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number fever boosted Pepsi's sales every month from $10 million to $14 million. It had a huge impact on Pepsi's bottom line. Number fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with number fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the streets, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realized very early that there was a problem. Hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their million-peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anacita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby store to buy some rice one day when a Molotov cocktail was thrown at a Pepsi truck in a violent protest. It bounced under the truck and exploded. It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, a family had been ripped apart by this competition. And Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for number fever. The biggest revelation from my reporting was rumors that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report with a headline that said, Pepsi goons bomb their own trucks. And when I visited the MBI, the police department in the Philippines, they presented me with documents and interviews with people who claimed that Pepsi had paid them to cause riots and to cause trouble outside their plants in order to destabilize the situation and to frame the owners of the coalitions that were fighting them to try and curry favor. I just thought that was so shocking. And of course, Pepsi denied it, but how bizarre that a company would be accused of bombing their own trucks. The contest had sparked so much anger in the Philippines because it landed at just this really weird time in the Philippines' history. It was during a crazy election that was racked with allegations of fraud. The Philippines was in a kind of love-hate relationship with America. They loved, obviously, the American aid and finances that was pouring into the country, but at the same time, they yearned for independence. They wanted to be their own country. Vicente Del Fierro was a local preacher living in Manila, and he hated the Number Fever campaign. Del Fierro thought Pepsi's Number Fever campaign was just one of the many ways that America was asserting its dominance over a third world country. He hated seeing his fellow countrymen get ripped off, in his eyes, by this huge multinational American company. He wanted justice. Del Fierro rounded up over 800 winners of 349 bottle caps, and he got them all together to sue Pepsi for over $400 million to be divided between those holders of lucky bottle caps. Del Fierro took money from some of the people who could afford it. They paid him 500 pesos to help with legal fees, but for people who couldn't afford the money, he would just represent them pro bono.
The alliance is to build up pressure on Pepsi. And so you see people marching in the streets. So we have mounted our own campaign, even in the U.S.
He flew to America and he hired two consumer lawyers here in America to take on Pepsi. He had a meeting at Pepsi's headquarters to try and resolve the problem, but he said he wanted to take it all the way to the highest courts in America. When those cases were heard in America, those courts decided that this was a problem that should be heard in the Philippines, not in America. Back in the Philippines, Del Fierro continued his case in the Filipino courts. At one stage, there were arrest warrants handed out for 9 Pepsi-Cola executives, which he saw as a big victory. We don't know if those arrest warrants were ever upheld, but it made newspaper headlines across the country. Pepsi did not take kindly to Del Fierro's campaign. They tried everything to shut him down. They sued him for libel.
My father had to attend 3 times a month for a branch 145 and another hearing for the branch 113A, also 3 times a month. Also, there was a time my father was hospital due to heart failure. Still, he had to attend the 2 branch hearing. Otherwise, for not attending, the judge will issue warrant of arrest to my father. My father passed away January 13, 2010. After staying for almost 1 year in the hospital, he died of complications due to heart failure. After the death of my father, I was inspired to do the website. PepsiCo will be remembered for what they did to the consumer in the Philippines and to my father.
When I reached out to Pepsi for comment for this story, they claimed that they didn't have access to anyone who was working at Pepsi that was around in those days. They also said that during COVID-19, they didn't have access to their documents about this, but you know, they were very careful to say that they were sorry for everything that happened, and we do know that Pepsi did try everything to try and make this right. The Pepsi Number Fever disaster cost the company millions. We know that they paid up to $10 million in those goodwill payments, but the financial effect could be much greater. After the disaster, we know that Pepsi sales dipped. They were overtaken by Coca-Cola again. Pepsi's Number Fever disaster changed the legacy of that soft drink in the Philippines forever. Some people of a certain age won't touch it. For many people, Pepsi is a taboo word. A lot of the people that I spoke to were still quite traumatized by their experience, by that experience of winning 1 million pesos, losing it, and then returning to their normal life in poverty in Manila.
When the news of the bombing came out, it was a massive story in Germany.
We are following some breaking news coming to us out of Dortmund in Germany.
It was covered by all the media outlets.
3 roadside explosions triggered at the same time last night as the coach left its hotel in the south of Dortmund.
Public figures commented on it.
We should not let them affect our life, whoever it was.
The media echo went far beyond Dortmund.
I think it was front page news in every single big paper around Europe. Everyone thought of like a terrorist attack, and people were scared that throughout the city in Dortmund there was more attacks to be happening.
Unbeknownst to investigators, just after the bomb went off and the players of the team were shell-shocked, the person who had masterminded the attack was actually sitting in the hotel eating steak and sweet potatoes. My name is Thomas Rogers. I'm the journalist who wrote the article, The Get-Rich-Quick Scheme That Nearly Killed a German Soccer Team. Dortmund is a mid-sized city in the western part of Germany in a state called North Rhine-Westphalia. And it's a former industrial city that's kind of fallen on hard times in the last few decades. It was severely bombed in the war, so the center of the city is quite stark. Some of the few high points include its soccer team.
My name is Ike Henning. I'm a reporter with Bloomberg News, and I'm a great fan of Borussia Dortmund. Dortmund fans are super loyal. On all match days, the entire city is in black and yellow. It's like a religion.
I think more than most German cities, soccer does play a very large role in the identity of Dortmund. In October of 2000, the BVB became the first team in the Bundesliga to actually go public. Salaries for soccer players in the Bundesliga have gone up very dramatically. With such high prices, they thought that by going public, they would be able to compete better with big teams like Bayern Munich.
Unfortunately, that didn't go too well. Dortmund bought too many expensive players, high wages, and the club almost went bust in 2005.
The price of their shares, it has sometimes gone up, but mostly gone down since they made that decision. So on April 11th, 2017, the team was staying in a hotel on the outskirts of Dortmund.
Match days are always special in Dortmund. Everyone is looking forward to it. The team always meets in the same hotel ahead of matches.
They stayed in this hotel in order to have a kind of neutral space before games so that they could concentrate, be sort of isolated from distractions, things like that.
Everyone was pretty optimistic. They had a chance to go really far, maybe into the finals. I was in the office and getting ready for match day. I was going to meet with a friend, a fellow Dortmund supporter, in a pub. As always, the fans are very excited about matches.
On that day, they were heading to play in the quarterfinal against AS Monaco at Signal Iduna Stadium, which is in the center of Dortmund. Shortly before 7 p.m., the players of the team boarded their official team bus.
When the bus took off the parking lot of the hotel and turned on the street, there were three detonations, 3 bombs that exploded and hit the bus of Dortmund.
3 explosions occurred close to the Borussia Dortmund team bus. The B team bus had just left the hotel. The explosions destroyed 2 windows in the rear part of the bus.
People screamed, people jumped to the ground.
The fellow Dortmund fan I was supposed to watch the match with, he called me and said, turn on the TV, there was an attack at the Dortmund bus. And I thought he was like, that was impossible.
Some of the players screamed at the driver to keep driving as fast as possible because they were worried that people might storm the bus.
German investigators say the explosive devices used in the attack on the Borussia Dortmund bus contained metal pins, and that one had pierced a seat headrest.
Unbeknownst to the team members, the actual mastermind behind the attack was, as they were disembarking, the bus was actually eating steak and sweet potatoes at the hotel they had just left.
Authorities are attempting to verify a letter left at the scene claiming jihadists were behind the attack.
Because there had been a series of attacks by Islamic terrorists in Germany and Europe, there was widespread suspicion in the media that this was another Islamic terror attack. 3 letters were found at the site of the bombing that took credit for the attack on behalf of Islamic State. There were, however, reasons to doubt this particular narrative.
Would actually be a surprise if ISIS were actually part of this attack. Possibly could be employed by other groups like the far right wing to try and shift the blame.
The letters had some strange qualities. They were written in a strange German that used big, sophisticated words, but had basic grammar mistakes, as if someone was native German speaker, but pretending to be a foreign person.
Federal investigators have detained one man suspected of links to Islamist terrorism, one of 2 suspects whose apartments were raided this morning.
Shortly after the bombing, a man in Austria named Rudolf, who was a big BVB fan, he noticed that something strange was going on the stock market related to the team's shares. He emailed the lawyers of BVB, who then forwarded that email on to investigators. The email stated that someone had bought 60,000 BVB put options, a wager that the value of the shares of the team would fall below a certain amount at a certain date.
Why would someone buy that ahead of a match and then 3 bombs go off? Something isn't right here.
For the person to make money off of that, it required the stock to go down quite a bit in a fairly short period of time. And it wouldn't just be the team losing a match, it would require something much bigger than that. There was another big red flag about this purchase, which is the fact that it had actually been made, number one, on the day of the bombing, but also from an IP address that had been traced to the actual hotel where the bombing had taken place.
When 3 explosions targeted the bus carrying the Borussia Dortmund footballers on April the 11th, written notes left at the scene claimed the attack was the work of ISIL. The truth, as is now alleged, is remarkable.
On April 21st, the police arrested a man in a southern German city called Tübingen. He was on his way to work, and his name was Sergei Benegold. He seemed like an unlikely suspect because he had no known connections to the Islamic terror world. He didn't seem like a far-right extremist. He didn't seem like a left-wing extremist either. He seemed to be a completely unremarkable young man.
A 28-year-old German-Russian man, named only as Sergei W., stayed in the same hotel as the players on the night before the bombing. He specifically requested an upper room overlooking the bushes where the explosive devices were hidden.
The media dissected why he would do that, what was his past.
He had been inspired by the 2015 terror attack in Paris. And he noticed that in the aftermath of the attack, the stocks of French companies went down. And he believed that if an attack took place that was directed at a specific company, that the decrease in stock price for that company would be even more dramatic.
It never occurred to anyone that someone would do that out of greed.
We now know that the suspect bought 3 different derivatives on the Borussia Dortmund shares. With all these derivatives, he bet on falling shares. The suspect bought the majority of these financial products on the 11th of April, the day of the attack.
If the plot had been completely successful and the stock had reached a value of 0, Benegold would have made up to 570,000 euros, or the equivalent of about $608,000. Ultimately, the plan completely backfired.
The attacker, Sergei Benegold, didn't make any money. In fact, he lost money.
In court, he would be extremely quiet. He usually kept his hands clasped together. One of the lawyers actually commented that he had never seen a defendant act so calmly. Weinergold had served some time in the German military. From that information and from online research, he was able to figure out how to assemble remote detonated bombs that would do what he hoped to do. There were a few days of extremely emotional testimony, including the soccer players who described doubting whether or not they could ever play another game again.
It brought everything back up, and it didn't quite help them to kind of process what was going on.
Throughout it all, he sat there completely silent. The big mystery that was swirling around the trial was the question of why he may have simply done it because he wanted to impress a woman. Rebecca is a young woman who has a very troubled home life. She ultimately sees her relationship with Weinergold as an opportunity to leave that troubled home. Weinergold is a Russian immigrant to Germany. He speaks with an accent. He has anxiety in large groups of Germans. She begins to resent the fact that he has these fears and feels a little bit trapped. Rebecca attempts to dump him on multiple occasions, and he threatens to commit suicide if she leaves him. Weinergold apparently told Rebecca that she would soon be seeing a surprise. After being dumped via text message, he apparently began planning for this attack in earnest. Weinergold was charged with 28 counts of attempted murder, which carried a maximum sentence in Germany of life in prison. He claimed that he had nothing to do with the attack, but as time went on, he admitted that he had actually been the person who had built the explosives and had set them off. But he claimed that he didn't want to actually kill anybody. Ultimately, Weinergold didn't receive the harshest possible sentence. He was given 14 years in prison, but it's still a considerable amount in jail in Germany.
The threat of an asteroid hitting Earth is very real. If it's big enough, it's also very final.
These are very, very infrequent events. The probability is not zero, though.
A blinding flash of light streaking across the sky.
About 100 tons of space rock falls on Earth every day. Most of it is so small it burns up in our atmosphere or lands unnoticed away from major populations. No human in the past 1,000 years is known to have been killed by a meteorite, and according to NASA, no large object is likely to strike the Earth any time in the next several hundred years. However, one thing is certain: we haven't found them all.
There are thousands out there, and we don't know where they are.
There are a lot of asteroids in our solar system. They number in the billions.
Scientists all over the world are working toward detecting and deflecting the most catastrophic of natural disasters.
The race is on to find as many of these objects as we can.
We have a way of calculating whether or not an asteroid is potentially dangerous or not.
I mean, I think it's something worth investing in. It's our existence at stake, right?
Amy, let's get this one out of the way. It's probably the question you get asked the most, but how scared should we be?
Asteroids and comets are a natural hazard that's out there, like a lot of other natural hazards. These are very, very infrequent events, these collision events, where an object actually impacts the Earth. The most important thing that we need to know about asteroids is, when the next impact is going to happen and how bad it will be. What we know is that an object that's about, say, a kilometer across is capable of causing very, very wide devastation across the planet, really, truly global devastation. The object that wiped out the dinosaurs was somewhere in the neighborhood of 5 to 10 kilometers across, so even bigger than that. At a kilometer, it's still going to be very bad and it will have global effects. For objects that are capable of causing what I would call sort of regional damage, kind of a large major metropolitan area, a city and its surrounding environments, sort of around 100-ish meters. It depends on the details of the composition and so forth.
By the 1980s, NASA was cataloguing near-Earth objects. In 1994, stargazers watched as comet Shoemaker-Levy 9 hit Jupiter. The resulting zone of chaos was estimated to be as large as the Earth, and the event became a turning point in the search for asteroids and comets in our solar system. In 1998, Congress tasked NASA with finding 90% of asteroids and comets 1 kilometer wide or larger. Soon after, Hollywood blockbusters Armageddon and Deep Impact brought attention and fear to the masses.
The great news is that the vast majority, more than 90% of all the really large 1 kilometer near-Earth objects have been found. The challenge now is working down to these smaller sizes that are still quite capable of causing a lot of damage, but they're just harder to spot because they're fainter, they're smaller.
Can you give us a sense of how many are out there in our solar system?
We know that there are a lot of asteroids in our solar system. They number in the billions. Most of them, however, are between Mars and Jupiter in what we call the main asteroid belt. This is a region of space where most of the asteroids in the inner part of our solar system live, and they stay there for many billions of years. There is another population, though, that kind of leaks inward and gets into the region somewhat close to the Earth, and we call these near-Earth objects. We think that there are millions and millions of near-Earth objects that are out there in the total population. As of today, we know of sort of around 20, 25,000, something like that. When we first spot an object, we really know very little about it. We just see something moving across the sky. So all you get is just sort of a handful of snapshots, just enough to be able to tell that this isn't an asteroid that we've already seen before. And then once we can calculate the distance to it, we can now start to make predictions about its true size. Is it large or is it small? So we have a lot of information that we have to get pretty quickly to really understand what's going on.
Finding asteroids is just one piece of the puzzle. Planetary scientists are extremely skilled in determining the orbits and speeds of asteroids based on relatively small amounts of data. NASA runs simulations of the trajectories asteroids could take, which is useful but time-consuming. A team of scientists in the Netherlands have found a way that could buy us more time.
Our method is very quick. So you can very quickly get an assessment of whether or not the object is dangerous or not. If you look at the classical way of determining the danger of an asteroid, it may take days of computing time on very big machines to determine this hazardousness.
The current problem is that there's just too many asteroids out there to spend a huge amount of computational power on all of them. So the neural network allows us to focus on what really could go and pose a hazard to Earth.
A neural network is a computing system that mimics the way the human brain operates to find underlying relationships in a set of data.
By training the network in this way, you train it in recognizing those objects that are most likely to hit the planet. And once it's trained, you can apply this network to all the unknown asteroids. And then you can make a selection and saying, hey, these are the ones which appear to be having orbits similar to the ones which we know are hitting the planet. That doesn't mean that they do, but it only means that they look very similar to the ones we know they do.
What else did you find? Should we be particularly concerned about anything?
One thing that we did find is that our neural network was able to go and identify a handful of asteroids which weren't considered potentially hazardous, that when we went and integrated them forward in time, they came quite close to Earth.
We find a handful which were not detected before or not considered being dangerous before, and we think they are potentially dangerous.
It's very hard to simulate kind of going forward in time an asteroid that's going to hit Earth because, well, the Earth is really small and space is really big. And then you have to have very exact parameters to shoot an asteroid that goes and hits exactly Earth. And then Simon had the ingenious idea of not even trying to do that and just launching the asteroids from Earth's surface and integrating backwards in time.
It's very hard to make it hit. So you need a lot of calculations which all end up in nothing. And the idea was then like, well, let's not do that. This is basically what NASA is doing. NASA is taking an asteroid, making multiple copies of them, shooting them all forwards in time, calculating their orbits, and then see what fraction sort of gets close to Earth. Not even hitting Earth, but getting close to Earth. And that they call it a potential impactor. So you calculate the solar system forwards in time for, let's say, 1,000 years. And then you launch asteroids from the surface as if you go forwards in time, would fall on the surface. You calculate them backwards to today, and then you get your orbital parameters of today's asteroids, which you know will land on the planet. And those you can use as known impactors and compare with all the other asteroids in the solar system.
Can simulations and AI, can those things fill in the gaps where perhaps telescopes and other imaging tools can't?